Good morning, everybody. It is Monday, September 30th, 8:47 a.m. We are here back once again on another market open. Folks, we are back to start off the week. It is officially Monday, and we've got a lot to talk about today on the market open. We also have a lot to go through this week as we have jobs data coming out on Friday. We've got more inflation data coming out. We've got Jay Powell speaking a little bit later today. That's going to be at 1 p.m. So I'll be streaming on a separate stream, whatever Jay Powell has to say at 1 p.m. I don't think it's going to be anything that crazy, but he's going to be talking, and we'll see if we can get anything out of him during that conversation. We've got to talk today, most importantly, I believe, about China. That is taking up a majority of the stuff that I'm reading in the morning, and I want to go through the implications of that. If you went long China anytime in the past 2 weeks, you are doing very well. You are probably outperforming most U.S. index and mutual fund investors, given all the Chinese indices and individual stocks have started to outperform pretty much a lot of the U.S. companies outside of like the major tech companies like NVIDIA, et cetera. So it's been a really interesting week for China. We'll talk about that. We'll talk about the sustainability of it, what if it makes sense over the next couple of months, and where the CCP kind of sees this going. And then we've got a ton of macro data coming up this week, and we have projections for that macro data. So Goldman Sachs in particular has put out a lot of projections on where they think jobs numbers are going to come in for non-farm payrolls on Friday, but they also put up some projections on where they think inflation is going to go by the first half of 2025 if the China stimulus and oil prices continue to be acting the way they're acting. And the results are actually what you'd expect. I mean, things are going to start to come down dramatically, which is good for U.S. equity. So we got a lot to talk about, a lot to get into there. Also, today's the last day of September for trading. And markets are down a bit in the pre-market. I am very curious to see how we end out the month. Remember, September historically, at least for the past 5 years, has been down 5% every single year. In an election year, it's even worse, right? It's down. And this year has defied those expectations. So unless we fall 2% today on the S&P, the number you're looking for is about 560. We're at 570 right now. If we don't hit 560, we're going to end green. I think 555. We're going to end green for the month, which is pretty incredible. And we're up 5% from the lows when we fell to 538 on September 6th when that jobs data came out. So tomorrow officially starts October, which is kind of crazy. And now we have to end out September and see how this ends up playing out. All right, we got a lot to talk about. Thank you, everybody, for being here. Katie, Wick, Sanjay, Tony, June, Jean, Daniel, I'm Beneficial. Thank you, everybody, for being here today. Midwest, what's up? This is a hell of a name. Tortoise Tom from Massachusetts. Hell of a name. If you guys know, you know. Tortoise Tom from Massachusetts. I love it. That's just I know what you're doing with that name there. I get it, and I like it. I think it's creative. So I love that. Dylan, hello from Sri Lanka. Hello, thank you for being here. Samir, Benny, what's up? Suri, Rodolfo, Zocold, Ed. I said it wrong. Of course I said it wrong. Of course I said it wrong. Well, that's why he made it his username. So just to get me to say it wrong. Blake, what's up? Felicia, Stanley, good morning. Good morning. Thank you, everybody, for being here today. All right, so let's get started on the market open. First of all, I think let's take a second to acknowledge we're all alive on planet Earth. Okay, like I don't want to get super, emotional or motivational or anything, but like we're alive. It's another day, September 30th, 2024. We could be dead. We're not dead. We're alive. I called up a friend yesterday, and I called up a friend with an idea that I had. And, she was so happy that I called her because she was apparently crying to ChatGPT about her life because like her life is just, she's dealing with a lot of shit. She got laid off and blah, blah. And she was like, thank you for calling me because I was literally crying to ChatGPT when you called. Like she picked up in 0.2 seconds. I was like, damn, that's a quick phone call pickup. But it's because she was crying and she was like sad with her life. So I bring that story up to and her day got a lot better after that phone call. So I think I bring that up to say, shit could be worse. So even though if anything's going on in your life, things obviously could be worse. And it's always grateful to be alive and to be happy for the fact that you get to live and try and do cool stuff and invest in global capital equities, especially invest in China if you're investing in China, or not invest in China and invest in Palantir. We're alive and we get to be alive, which is always a good thing at the end of the day. All right. So you have women friends. Yes, I have some women friends. Okay. Goodness gracious. I can't. Goodness, guys. I have some friends that are not all guys. so crazy, man. All right, so let's talk about China. I think that's the biggest headline of the day. China. This chart right here, or not this chart, but this set of increases for all the Chinese indices. This was posted an hour ago when the pre-markets opened for the United States, even though the Chinese markets were open overnight. It's all up a lot. And when I mean a lot, I mean, look at these numbers. These are indices. These are not stocks. Let me say that again. These are indices. These are not stocks. So when you see the Shanghai composite rise 8%, you see the Shenzhen composite rise 10.6%. You see CSI 300 index rise 8.5%, which is a lot of the tech stocks. A50 rises 7.2%. These are the highest gains we've seen. Some of the highest gains we've seen in China since 2008, if I'm not wrong. I mean, these are just incredible gains in the context of what's happening in China. Basically 2008. So Chinese stocks right here have their best day. This chart kind of shows it off in 16 years. 16 years. Imagine being short. Imagine being short anything China. I mean, when Chinese stocks are going up 16% on the indices, and on the indices and on different versions of amalgamated like batches of stocks, whether they're utilities, consumer companies, tech companies, then any stock that you own in China likely is benefiting from that. I mean, goodness gracious, freaking NIO in the pre-market, 16%. 16% on NIO. Dude, most people thought NIO, including myself, was kind of like a dead company that really wasn't going to do that much because it's freaking NIO, right? It's like, at the end of the day, it's just not as competitive with the BYDs, the Li Autos, and the Teslas of the world. It's up 16. It was up 12% on Friday. 12 plus 16 is 28. It is up 28% in 2 days. I mean, the level of stimulus that China has put out over the past couple of days is just incredible. I'm not saying this means go long China. That's an individual decision you have to make. I have not made that decision. I'm just trying to analyze what it means for U.S. equities, because most of us are invested in U.S. equities and overall the global economy. And it's really good for the global economy. It's really good for U.S. equities. Here's 2 headlines I want to show you guys over the last 24 hours that have popped out because of China. And I think it's very important to kind of analyze that. The first headline is late last night, China told every single bank inside of the country to lower mortgage rates by 30 bips on all existing mortgages they've given out by the end of the month. Not, hey, a new mortgage goes down by 30 bips. The existing mortgage, imagine if you currently had a mortgage with JP Morgan and it was at 4.5%. And tomorrow you wake up, you get an email, and your new mortgage rate is 4.2%. That is quite literally what is happening in China. Now, I did some research. The United States has never done this. With all the stimulus we've done, we've never actually forced banks to lower mortgage rates by 30 bips or a certain percentage. We've essentially done that in an implied move via the Fed, right? The Fed has basically like implied a way to be able to do this. But this is like the Chinese government, the CCP, going up to every Chinese bank and saying, hey, you have 30 days, reduce the mortgage rates immediately by 30 bips, which means the average national mortgage rate has declined based on the new ones and the old ones by 50 bips, which is very good, obviously, for Chinese citizens, for new people that are trying to buy a house. And it is highly stimulative because that means people have more money in their pockets that they don't have to put in down payments and pay in monthly mortgage payments. So that's the first headline I saw last night that was like, okay, these guys are not messing around. The reason NIO's up 16% right now is probably because of the fact that if you have a mortgage in China, you just freed up a decent amount of capital that you could potentially put into maybe buying a new car from NIO. So that is why we're seeing a ton of momentum right now in the Chinese equity markets. And then here's the other 2 headlines that I thought were incredible. In the first 30 minutes of trading last night, when the Chinese markets opened, they passed $1 trillion of trading volumes, which is $142 billion of United States of USD, right? So $1 trillion of yuan in 30 minutes of in just opening of trading volumes, which is about 142 billion for an economy that really doesn't get that type of momentum, for a stock market that does not get that type of trading momentum. That's what it had in the first 30 minutes of opening, which broke all past records of being the fastest time ever. Now, 2 days ago, This was reported by Bloomberg. Many brokerages in China are now offering 24/7 services to meet the demand as new individual investors rush to open trading accounts after the Chinese stock market rallied 16% last week. It's up another 8% a day. So that's 24% in the past 7 days. I think this is really bullish for the U.S. economy for two reasons. If new brokerages or if brokerages in China are simply saying, hey, there is so much demand, we have to offer 24/7 services. It's just the amount of demand that China's getting from individual investors that have probably been hoarding cash, just waiting for the moment when the CCP would finally capitulate and begin stimulus. We're seeing that momentum rush into the stock market right now. And we're seeing that with the trading volumes when you have 142 billion traded in the first 30 minutes of a stock market that's been dead for the past 6 years. That is a very big deal. Now, why does that matter? A, that means they're going to be buying new Chinese companies. New Chinese companies are going to be getting a ton of capital. If Alibaba, Neo, JD get all this capital from individual Chinese investors, they can become more efficient. If they can become more efficient, U.S. companies can benefit from their efficiencies. Simple example, if you're a supply chain company in China and you have tons and tons of U.S. companies that you serve for international supply chains, if you have more capital, if you can grow, if the cost to borrow capital is lower in terms of interest rates, boom, you can become more efficient. You can become more productive. You can hire more people. You can create more jobs that can be way more efficient to build more Vision Pros or Apple iPhones or whatever it may be, which would benefit a U.S. tech company like Apple, which is good for global investors in Apple, but also investors in the United States. That's the first thing. Number two, if you're an individual investor that's starting to put money into the stock market in China, you might start wanting to explore opportunities like Palantir, Google, Tesla, et cetera, because now that you're back in the investing mindset, because your government has finally created the environment for you to feel investing is like an okay thing to do. Well, then what if you start investing in all these other equities across the entire world, which can stimulate global economies? What if you start investing in India? What if you start investing in Japan? Like the entire idea of this stimulus, I don't know how sustainable it's going to be. And that's kind of the doubts I have right now. I'm like, look, are they only growing because of the money printer, or are they growing because the money printer is going to actually enable real top line GDP growth? I don't know. I think it's going to take a year to kind of see how that plays out. But it does bring back the investing mindset. And that investing mindset is very, very important. And I think it's going to affect the broader global economic landscape. And this is the chart as well to look at in the context of China. So we talked about a couple headlines with China. This chart right here, very bullish for Bitcoin and also very bullish for global equities. Take a look at global liquidity. This chart, I think, came out like 2 days ago as per China's stimulus. You can see right here in 2020, we were at an all-time peak, right? That blue line right there. By 2022, we fell to an all-time low. An all-time low in the past, basically 24 years. And now, as you can see, the blue line starting to get higher. We are starting to pick back up. This is because of China and the Saudis. The Saudis are lowering oil prices. That's beneficial for liquidity as well. But the China in particular injecting the amount of money that they've injected into their economy, that is simply helping the global economy at a broad scale. And obviously that is very bullish for Bitcoin. Now, Bitcoin's down a little bit in the pre-markets. Bitcoin was at 66 all weekend. I was surprised Bitcoin didn't fall earlier in the weekend because we had those headlines coming out of Israel and Lebanon. Those were just more Middle Eastern instability headlines. Bitcoin usually takes a nasty haircut every time any Middle Eastern headline comes out that's about instability, potential war, etc. But Bitcoin kind of held on. I think Bitcoin's down more so because of some of the stuff that happened last night with Japan, which we'll talk about. Japan's Nikkei index was down about 4%. It's actually up right now, 2% though in the pre-markets. But Bitcoin right now is at 64,000, kind of chilling out. So the more liquidity that opens up, the better for U.S. stocks. I think the conclusion to all this China stuff is that I don't know a world in which the United States faces a major recession over the next 6 months when China is printing as much as they're printing. Because if the United States collapses, everything collapses, right? And China right now is not letting themselves collapse. So they're like really making sure that the U.S. has a good chance of not collapsing for all the reasons we talked about, how that liquidity helps the entire world, helps American companies become more efficient. And if the CCP doesn't do anything stupid, like reverse the actions that they've done, which it seems like they're not. It seems like they're going even harder and they have more things that they want to introduce. I think that's going to help U.S. equities. And if that helps U.S. equities, that's not going to be the worst thing in the world. Jet says, I think it's the latter. Money printer will sustain the U.S. markets run. Where do you think we get all of our manufacturing done? Very bullish for U.S. small caps, rock hard for IWM. I 1000% agree with Jed right there. If the money printer in China is helping all of these companies that outsource manufacturing to China, all of them, again, they're going to have lower cost to borrow capital, and they're going to be able to hire more people. They're going to be able to train more workers. So small caps that have manufacturing and supply chains in China, large caps like Apple and Nvidia to an extent, Tesla, obviously 25% of sales in China. Like, dude, we haven't even talked about the Tesla angle from this. I think this is very bullish for Tesla. Now, obviously 1010 is what is most important. Tesla down a little bit in the pre-market to 258, but China is a big market for them. And I think that's going to have international implications for their ability to not only sell more cars to people that have more money in China, but also more efficiently make those cars and potentially lower their input costs, which potentially can increase their gross margins, which is good for the overall business itself. I think I don't see where the bearishness is for China. You can argue that like this is unsustainable and that at some point the chickens are going to come home to roost and all that stuff. Maybe, but that happens in cycles, and I don't think that happens overnight. I mean, if that happened, like we saw in 2020 when we started printing, by 2022 everything hit the fan. Maybe 2026 everything hits the fan if this is truly unsustainable and it doesn't encourage real GDP top line growth via the money printing, and it's only growing because of the money printing. But if that's the case, then I mean, we got a couple years to play this out, I would imagine, before things get that bad. At least that's what it seems like. So the China stuff is good, man. The China stuff is good. Again, that doesn't mean you have to go long China. I think you can be long the US to still get exposure to China, just like indirectly, even if it's not like direct exposure. But if you're more comfortable investing in the US, which I am, the China stuff is just another macro tailwind to think about what it means for US equities. And if it means good stuff for US equities, then I think US equities should hopefully benefit from that over the long term. One thing that's really interesting, last thing I'll say on China, and then we'll move on from this. Look at the most crowded trades of 2024. I'm sure a lot of people probably already knew the first one, long Magnificent Seven. But short China equities is the second largest crowded trade of 2024. Then you had long gold, long two-year US bonds, which are starting to come down, long corporate bonds, and short the Japanese yen. We all kind of learned about the Japanese yen in on August 5th. But short China equities, 19%. It was one of the most crowded trades compared to long Max 7. What does that mean? That means that there's going to be a lot of short covering if the money printer is not getting turned off. And from all intended purposes, the money printer in China is not being turned off. Like, it's so funny when Kris made that point on the channel on Friday that the CCP is a communist country, and that means they get to kind of in an authoritarian fashion impose their will. That's bad. But like when it comes to imposing their will on something that like helps everyone, which is like money printing, it's kind of good because they're like forcing the money printing. Like, imagine if the United States told JP Morgan you have to do XYZ. Like Biden gives JP Morgan a call and says, hey, you have to do this. And like, if you don't, like, we'll kill you. Because that's basically what the CCP is doing right now to the banks. Like, hey, if you don't comply, like, I'm sure they're not saying we'll literally kill you, but you know, those guys know. They saw what happened to Jack Ma. Like, you say something bad about Xi Jinping, you get locked up. And like it's just the culture there, which I don't support. I'm just saying, like, if it's about money printing, I don't think it's a good thing either. It's just they are going to do what they're going to do. And because they're doing that, you're going to start to force stimulus in the country. Again, long-term sustainability, I don't know how much they can keep imposing this stuff, but at least in the short term, it seems like that's going to happen. And that is what's leading to more liquidity globally beginning to open up. Again, you want a free economy where everything can operate in its own way. And I know people say, oh, because we have the Federal Reserve, it's not like a laissez-faire free economy. I get it. But it's definitely not like China, where the CCP can quite literally tell companies to do exactly what they want them to do, or else things get bad. I'm sure, you know, presidential administrations in the United States have tried to get companies to adjust their agenda, and probably have been successful many times just by like sheer peer pressure, but not like, hey, we will like shoot you and we will put you in a dungeon if you don't do this, you know. And that's kind of what's happening in the CCP. And as a result, it's leading to more liquidity opening up. So the conclusion on China is that it does feel like it's a little bit more of a trade than a super go long. I think a lot of smart money probably is getting into China, but I also think a lot of people that have been in China and have seen a 40% move, for example, in Alibaba in the past 3 weeks, they're probably taking some profits as well. I definitely think there are some people that are taking advantage of this move to the upside. And, you know, a lot of people say Alibaba's fair value is 250, stocks up 5% again in the pre-market. It's at 112. It's got a long way to go to get to sort of those fair value multiples. But in general, we are seeing more people get crowded into this long China trade. Let's listen to Dan Ives. He is back. He thinks 25% growth for tech stocks will happen in 2025. Here's his thesis and why he thinks that'll be the case.
I got to start there. On a serious note, let's get back to the note. You're seeing a lot of upside for tech in Q4. You actually believe that tech can move another 10% in Q4. What's the catalyst?
I mean, look, this is our second trip in Asia in the last 6 weeks. Demand's outstripping supply 15-1. So even though right now it starts with Godfather of AI, Jensen, NVIDIA, this second, third, fourth derivative, it's just starting to play out in terms of AI. I think that is going to be the catalyst to tech stocks being up 10% plus this year, 20% next year. I think the AI party, still 9 p.m. with a party that doesn't end until 4 a.m.
Why does the party end at 4 a.m.? I mean, I don't even, this metaphor always cracks me up every time you do it. But on a serious note, you're saying demand is up. That's what's going to push the tech sector 10% more in Q4. Demand exactly for what? For chatbots, for chips? I mean, what is the real catalyst here?
I mean, if I look from a chip demand, 15-1 demand to supply. So if you see how it's all playing out, enterprises are lining up in terms of the AI revolution. Now we're just going to start to see the software, the use cases. That's where massive AI, Palantir, front and center. You look at names like Oracle, what I believe Salesforce.com, ServiceNow. So now that tidal wave of spend, $1 trillion of AI CapEx is coming to the shores of tech, to me, in the next 2 to 3 years.
By the way, I interviewed Alex Karp a few weeks ago. We talked about you. We talked about you and some of your notes. He's a fan. He's a fan. I want to get to some more of your note. According to your note, for every dollar spent on NVIDIA chips, there's an $8 to $10 spend in the tech sector. So I want to drill down on that. Is it in the tech sector or is it on AI capabilities? Because we just talked about utilities having their best quarter, since back in 2003. Isn't a lot of this spending on just physical infrastructure? Is that technically tech spending?
Sure. I think 8 to 10 is going to be from software, infrastructure. You talk about the energy piece. It speaks to our view that it's not just about NVIDIA. It's not just about Microsoft. It's now about the multiplier. So what you're going to see really across software, I think the big catalyst going to tech over the next 12, 18 months, numbers are going to go up, I think, 15, 20% across the tech sector. And I think that's why a lot of the bears that are continue being those caves and hibernation modes, they come out talking about valuation. I think Street's underestimating growth. That's why, in my opinion, this tech bull market still in the second inning.
I got to be fair, though, Dan. You are one of the biggest bulls when it comes to tech overall. So you're always optimistic, in all fairness.
But let's just talk about scale. Me and you have talked for many years. There have been times where maybe there was some caution, where you could see some risk. But right now, in terms of just fundamentally what we see it across the board, not just in Asia, but around the world. Enterprises are lining up. And I think that's why it's about the next phases now of tech playing out in terms of this AI revolution.
All right, I want to talk about two different ETFs, the IGV, the software ETF, also the CIBR, cybersecurity. Those are two ETFs. A lot of investors I talk to, they say to look at those. Are we going to see these gains you're talking about for the tech sector in these two areas?
Oh, I think that's really front and center, because when you talk about use cases, it's about software, not just on names like Palantir and others, ServiceNow, Salesforce. I think the rest of tech, we'll even look at names like Adobe and others. And then you think about how you're going to protect that. Cybersecurity, that's where names like Zscaler or CrowdStrike, 1995 moment in tech, almost 1996, but it's not a 1999 bubble moment.
So, I mean, that's the kind of core Dan Ives thesis. Nothing has kind of changed from his perspective. One headline to support a little bit of what Dan Ives is saying that came out literally 5 minutes ago. The Department of Energy has approved a $1.5 billion loan to restart the Palisades nuclear plant in Michigan. This marks the first ever restart of a closed nuclear power plant in history. I mean, dude, that sounds like pretty big news to me. Department of Energy approves a $1.5 billion loan to restart the Palisades nuclear plant in Michigan. The reason they're doing this likely is because demand is spiking up for energy, and we can't get it from fossil fuels. We can't get it from renewables. We likely need nuclear. It is a crime that we have not actually built out nuclear infrastructure over the past 20 years for whatever ideological reasons people have had, but it seems like we're restarting nuclear power plants. So there you go. To Dan Ives' point around how much demand is coming for AI, I think the energy sector is, at least to some extent, kind of showing off. We saw the Microsoft Constellation Energy Group deal last week, had them up 30%. It's getting to the point where it's becoming undeniable that we need more energy. Oklo right here, one of these nuclear energy stocks, down a little bit in the pre-market. And, we got to get it from somewhere. And if the AI demand is real, if the CapEx demand is real, wow, NEO up 20%, then we probably are going to get that demand from alternative source of energy, which likely will be nuclear as well. And so, yeah, that's what we got there from the Department of Energy. These reopenings have to be driving the enviro nuts crazy. I mean, yeah, dude, a lot of people are against nuclear energy for, whatever reason they're against it. They think it's going to be bad for radiation or whatever. At the end of the day, we need the energy to come from somewhere. And so I would imagine nuclear energy is one of the ways that we get it. All right, let's take a look at what's going on at the rest of the market in the pre-markets. Rocket Lab is up 2.86% right now. So Rocket Lab, I think it's undeniable it's getting a squeeze. It's been like a 4-day squeeze. I think the squeeze is continuing. It hit 1070 in the pre-markets. It was up 50% last week. It's up 3% again today. I think it's getting squeezed. I think it's inevitable. I think the squeeze has been inevitable. I don't know how much more the squeeze has to go, but to go from 6 to 10, that feels very squeezy-ish. And I would imagine there's some juice left in there unless the shorts decide to double down. And if they do, maybe you get a little bit of downside momentum. But even if it holds $8 to $9 for the rest of the year, I think that's going to be an incredible year for Rocket Lab. So we'll see how that opens up in a little bit. Carnival Cruise, did they have their earnings yet? The earnings are today, right? Did they have the earnings yet? Or is it it's up 1%, but I don't see, let me see if there's numbers. Do I see numbers? CCL? No. Why don't they have their earnings? Usually they come up at like 8:30. Oh no, is it out? No. So the street wants $7.8 billion of revenue and they want $1.17 of EPS. They beat by, it comes out in 2 minutes, 9:15. Okay, cool. So in 2 minutes, we'll see. Okay, perfect. All right, so we'll see that in 2 minutes. Coinbase, what do we have on Coinbase? Coinbase down about 3.78%. That's because Bitcoin's down a little bit. S&P's down a little bit in the pre-markets, 570. Qs are down a little bit, 485. CrowdStrike's down about 1/3%. Tesla down about 1%. BP down about 27 bips. Google up a little bit. Alibaba up 5%. Meta's up about 0.11. And then PayPal's down. Most stocks are down. At least U.S. equities are down in the pre-markets. Now, remember, last week was a really good week for a lot of companies, so I would imagine people are taking some profits. We're getting into the election cycle. The next 6 weeks are likely going to be pretty volatile. Tom Lee came out with a note last night, and he says, hey, the China stuff is really good, but the next 6 weeks we still think are going to be volatile for U.S. stocks, so you have to be a little careful going into the election. I think that's fair. What's interesting is that September has denied the historical implications of being a bad month. I mean, we'll see, how we end out today. But if we don't fall 2%, then it's a green month for the first time in a couple of years. Maybe October ends up being the same. October historically in election years is not a good month. It's actually a month that kind of sucks, to be honest. This is what October looks like. We looked at this chart yesterday on the Future Show. But October and September tend to be horrible months during an election year. And as you can see, September right there, it's usually down, but it's down in like every category. So September is just a horrible month in general. October is down in elections. November and December tend to be up. Maybe this will be different this year, given September was different so far. We'll see what happens at 4 p.m. when it closes. But I do think we'll see some volatility. I think those will be decent dip opportunities based on the reasoning for the volatility. We also have a ton of jobs data coming out this week. So we'll see kind of how the market reacts to that as well. All right, CCL earnings should be out like up. There we go. We're going down. Short-term down. It was up a little bit. Now it's back to green. Let me see if I can get these numbers. It's like kind of flat now. Now it's officially down. Down 0.5 percentage point. Nothing too crazy. Now it's down 4%. All right, now it's tanking. So what is the street not like? What is the street? Now it's coming back to life. Now it's coming back. I don't have the numbers yet. Trying to see these numbers. That's weird. That was a really weird reaction. Now it's down 1.35. That was a lot of movement, right? Nick says, when is your last market open for the trip? So I'm going to India on October 5th, but I will still do the market open in India. The only thing I'm not doing is the market close. So I will be in India from October 7th to October 18th. Those are the 10 weekdays that we usually do the market open. I think the only day I won't be able to do the open is like the 18th because I'm at a wedding. But I think every other day we'll be able to do the market open. I'll let you guys know if I'm not, but it's going to be 10 episodes. Most like if I have to miss, I probably miss 2 out of the 10 episodes. The market close will not happen at all for the next 2 weeks after this week. But the market close, but the market open will still happen. Okay, I don't have the numbers from CCL. Carnival Corporation and PCL reports record-setting operating results, outperforms third quarter guidance, and raises full year 2024 guidance for the third time. Okay, that's really good. Why is the stock down 2%? Is this just a 9:15 type of move, and then at 9:30 it's going to gap up? I mean, that's a hell of a headline. That's not a horrible thing. Where the hell are the results, bro? Why can't I get the numbers? Why are they not popping up? Why are these not popping up? If anyone has them, please put them in the chat. I can't find them anywhere. They're not on their website because companies don't post their earnings results on their website ever. Weird. I mean, if it has that headline, yeah, it's already recovering a little bit. I would imagine this down 1% doesn't last for that long if that's the headline right there. Doug says it's a bad morning to have results. Market is about to follow Japan. That is possible. Will you still have the brick background in Japan? Probably not. Not in Japan, in India. Probably not. Maybe I'll find the bricks. Always find me somehow. They find me somehow. Carnival's still struggling right here. Let me see. If they raised full year guidance, dude, that is not bad. I mean, it shows that demand for cruises is alive. Also, oil prices coming down. Yeah, guess who that helps? Not only the airlines, that obviously helps Carnival Cruise. Oh, here we go. I got it. All right, so this is what we have for Carnival Cruise. Here we go. Net income, $1.7 billion, up 60% year over year. That's incredible. Outperformed June guidance by $170 million. Third quarter revenues hit an all-time high of $7.9 billion, up $1 billion from the prior year. Operating income of $2.2 billion as a result of strong demand and cost-saving opportunities, raising our full year 2024 adjusted EBITDA guidance to approximately $6 billion, up over 40%, and better than the June guidance by nearly $200 million. The cumulative advanced book position for full year 2025 is above the previous 2024 record with prices ahead of the prior year. CEO says we delivered a phenomenal third quarter, breaking operational records and outperforming across the board. Our strong improvements were led by high margin, same ship yield growth, driving a 26% improvement in unit operating income, the highest level we have achieved in over 15 years. We are poised to deliver record operating performance for full year 2024, with adjusted EBITDA now expected to cross $6 billion and adjusted return on increased capital to be approximately 10.5%. Strong demand enabled us to increase our full year guidance for the third time this year, and we improved our cost guidance, driving more revenue to the bottom line. Good earnings, just a crappy macro to report in, it seems like, for Carnival. Should be up now. Yeah, there you go. Now it's up. Weird movement as soon as the results came out, but there you go. Up 2%. Makes sense. I would imagine it would be up a lot more if we didn't have U.S. futures down. But good results from Carnival. I mean, those are pretty damn good results. Raising full year guidance, the best quarter they've ever had in terms of revenue. Net income's up 60% year over year. You can't ask for that much more, right? So we'll see how this one opens up, but up 2% right now. And not bad. If you're in the cruises, if you're in the cruise trade, I mean, I wouldn't, I don't know how you can be upset about those earnings. Those are good earnings. We'll see how the market reacts to it, but those are not bad earnings. And right now, up a little bit right now, but up about 2%. Norwegian, NCHL, what is the ticker for this one? NLCH, NCLH, that one's up about 0.5%. So that one's getting a little bit of a bid. And then Royal Caribbean, that's what, RCL? RCL is down 1%. All right, so Carnival is the one getting the benefit from it. The rest of the cruise is kind of not benefiting too much yet. All right, we'll see how that opens when the market opens. We got Rocket Lab up 2.86%. We got Neo up 18%. Let me look at the semis in the pre-market. Wow, all red across the board. So one of the things that is red across the board in the context of semis, Kris, I'll call you after the bell opens. So we'll get your thoughts on the earnings at 9:35, and you'll get to tell us what you think about earnings. We'll also get to see how the market kind of reacts to it right after the bell. NVIDIA right here at 121, down about 2.66%. AMD's down about 1%. Intel's down 1.3%. The only reason I think the semis are down, I mean, there's probably a couple reasons, but China on Friday told their companies to stop buying NVIDIA chips. I don't even know what that means, but they came out and they said, hey, don't buy NVIDIA chips. TSM fell 5% that day. Now they're down another 2%. This is kind of the risk to China, which is that they'll say something, and that, when they say something, it ends up messing up certain things just based on the mandates that they have. But I don't know if that's going to put a dent in NVIDIA's revenue, especially because NVIDIA wasn't even selling that many chips in China in the first place. It was less than 1% of the revenues, I think, in Q3. And it was 25% of the revenues in Q3 last year. So, I mean, they've adjusted. They've still grown, even though the China market has basically been decimated for their overall quarterly revenues. Other than that, I think semis might be down, maybe because Japan is down and some of that money was transitioning out of semis in Japan and out of crypto, and a lot of that money went into China, as we saw this morning with a lot of the Chinese indices. But outside of that, I don't know if there's that many reasons why the semis are down, other than people also wanted to take some profits as well. So that's what we're seeing right now in the semis and in the Japanese equities. Now, the reason why the Nikkei was down 3% yesterday, or 4%, is because Japan has a new prime minister. I'm not going to try to say their name, even though it sounds like Shiba Inu, but it's not Shiba Inu, but it definitely sounds like Shiba Inu. And the weird reason why the Nikkei was down 4% last night, I think it ended down about 4.8% right here, is because the prime minister was said to basically be a guy who wants to tighten monetary policy, aka raise rates. But then I read a couple of other articles that said no, he wants to lower rates. And so I don't know what's going on in Japan in regards to kind of how they're thinking of the prime minister. The real reason Japan is down is likely because they had some crappy macro data that I'll pull up in a second. And that macro data was likely the reason why we saw Japan go down 4%. But part of it was based on this turmoil of interpreting the prime minister's stance on monetary policy. Obviously, if he raises rates, that's not good for U.S. equities. That's definitely not good for Japan in a world in which they need a lot more innovation and like they need people to like take risks, which is coming from a loosening monetary policy. But it doesn't seem like there's going to be a threat that he raises rates anytime soon. As you can see right here, retail sales year over year in August was at 2.8%. The market expected 2.3%, so that's good. Industrial production came in at negative 3.1%. Consensus was negative 0.9%. That wasn't good. And then industrial production year over year came in at negative 4.9%. The market thought it would be 3.3%. So I think that industrial production year over year number is what got the street in Japan kind of upset. And that's why the Nikkei tanked. And that kind of hurt Bitcoin, and that maybe hurt, the semis, but I don't think that was necessarily a reason why it would hurt U.S. equities, which is why U.S. equities barely fell when Japan fell last night. I mean, futures were like down by 0.05% in the United States. So that's what we got going on. On top of that, Robinhood got an upgrade today as well. Robinhood got an upgrade by Deutsche Bank, my favorite bank because I love saying that name. And Deutsche Bank basically said, hey, we had a call. This is a really interesting upgrade. We had a call with their CFO, these like investor analyst calls or whatever. And yeah, we're like raising our targets to $27 from $24 because we think they're going to keep growing. So right here, overall, we remained encouraged by Robinhood's revenue and earnings momentum from a range of initiatives designed to bring more customers to the platform, better leverage addressable markets, and deepen user activity across products and services. We anticipate the company generating net new assets at an annualized pace well over 20% through 2025 and 20% in 2026. So they're expecting some real long-term growth out of this one, which should support continued adjusted EBITDA margin expansion and strong double-digit EPS growth in 2025 and 2026. And this was following a virtual investor group meeting with Robinhood CFO Jason Warnick and other key executives. What that means to me, and by the way, this is the second upgrade. We got a Piper Sandler upgrade to $23 from $19 on Friday. Now Deutsche Bank from $24 to $27. If they're upgrading after a virtual investor group meeting with Robinhood CFO, that means to me that Robinhood crushed the September month. Like they crushed the September month. And again, we have data for July and August. July was amazing. August was decent. It was not like phenomenal, but it was good. September market hit an all-time highs, and we lowered rates by 50 bips, which I mean, I would imagine the trading volumes increased, and I would imagine the 1% deposit match transfer that Robinhood had brought in a lot of more deposits. So I think Jason Warnick on that call with the Deutsche Bank guy probably hinted to the fact that, hey, we did really good this month, right? He probably literally couldn't say it, but I'm assuming that's what he hinted to. We saw this when they had the call with Wolf Research in like May, and Wolf Research upgraded them to $29 after having a meeting with them. I kind of think, if you have a meeting with the key execs and you feel really confident after the meeting and you up your price target, it's because you heard something in that meeting that is fairly obvious to you as an analyst for why you think there should be increased growth. So I think that September month is going to be probably really good for Robinhood. And as a result of that, we should see a strong Q3. If Bitcoin does what it does, that's also good for Robinhood. And then obviously if, the markets keep going higher with China stimulating and unemployment data coming out good, inflation coming down, that'll be also good for Robinhood as well. Tony Bag say I transferred to Hood this month. Yeah, a lot of people ended up transferring to Hood this month, and I think that is ultimately going to be very bullish for Robinhood going into Q3. When is Hood coming to Canada? I have no idea, but the problem with Canada, again, is there's a lot of financial regulations, and it's not just Canada, to be fair. All across the world, like, finance regulations are really hard to deal with, so I think it's going to take a while before Hood comes to Canada because they probably just don't want to deal with the amount of shit they have to deal with. It's going to take time, but I would imagine in the next couple of years, they probably try to get to China as well. Or not China, Canada. If they were in China, that'd be crazy, but China probably won't allow them, but hopefully Canada one day. All right, let's talk about Palantir. We got 3 minutes until the bell opens. Peter Thiel sold 4 million shares late on Friday night. So at this point, Peter Thiel has sold $600 million of Palantir stock, about $1 billion in 2024, $600 million in the last week. So 60% of the billion that he has sold in 2024 has happened in the past 7 days. What are my thoughts on this? A lot of people have been asking for kind of, my like overall perspective on this. Is it bullish? Is it bearish? I think it doesn't matter. Quite frankly, given Palantir stock action at this point, Palantir has developed a narrative independent of Wall Street's obsession with insider selling. Because a lot of times when a company is just performing and executing and there's enough liquidity out there to support the company institutionally from a retail perspective and from like a, hedge fund market maker perspective, people that are just buying the shares because there's so much demand for the shares, then insider selling becomes irrelevant. I mean, the fact that Peter Thiel could dump, basically 20 million shares in 7 days, and the stock is down, 1%? The stock fell from 38 to 36.54. I mean, come on, dude. Like it's one of those things where it's like, it just doesn't matter that much. Now, maybe we get a bit of a correction this week, a correction in October, maybe just people take their profits, whatever. But if you feel bad that Karp and Thiel are selling, one thing you cannot feel bad about is not selling with them, because it's not like they're selling at 38 and then the stock falls all the way to 26 and you missed your opportunity to exit with them. You can exit with them right now at a better price than what they're selling at. And I think Karp got like 35, Thiel got like 36.90. I mean, like, you can literally sell at even better prices than them or at the same prices. So from that perspective, I think it's something shareholders can't be that upset about, because what is there to be upset about? The stock's up a lot. It's made a lot of people rich this year. Insiders are taking profits. They've held these shares for 20 years. And they are obviously thinking that this is a good time to sell. Now, the bearish perspective on this, just to give a little bit of balance, is that I think Thiel is screaming that it's overvalued. You don't sell $600 million of a stock. Like, he wasn't doing this when the stock was, $27 for 7 months, right? He's doing this now that it's 37. So I think he is saying to the market, hey, I think it's overvalued. The question becomes, is the market going to care? And so far, the market has not cared at all. The market is ready to keep taking Palantir higher. And if they can crush Q3 earnings, which I think there's a shot they can, maybe we've got even more room to run for the rest of the year. But in terms of insider selling, I personally don't think it's just that big of a deal anymore, given that the market has been able to swallow up a lot of these sales and not care too much about it. 216 PE, yeah, it's a little bit pricey. Yeah, I've not argued with that at all. However, the market has its own narrative, and because they have their own narrative, that's what's allowing liquidity for insiders to sell and for the stock to stay kind of relatively stagnant, even though they've had to deal with almost 30 million shares being dumped from insiders. All right, here we go. It is Monday morning, once again, September 30th, last trading day of September, 9:30 a.m. Thank you, everyone, from the bottom of my heart, being here today, opening the market with me. The stock market is now open. All right, wake your ass up. Here we go. The stock market is now open, 36.51 on Palantir, down about 0.75% as we open up the markets. Carnival Cruise Line down about 1% after a really good quarter, down about 0.76% right now, 1838. S&P down about 0.17, 570. Tesla 258, down about 0.60%, about 60 bips on the day. Amazon down about 40 bips right now. You got Google down about 12 bips. Meta 566, that's down a little bit. IWM small caps 219, they are down, but they have a green candle, so they have a green candle right here, even though they're down still from the pre-markets. Robinhood 2385, down about 0.21%. They closed at, I think, 2386. They hit 2413 in the pre-markets. Now they're at 2385, so not too bad for Robinhood. You got MicroStrategy down about 4%. That's because Bitcoin is down. MicroStrategy was up at like 175 on Friday after Bitcoin went up. MicroStrategy was also at $110 like 4 weeks ago. So if you bought at those low levels, you're doing okay. Down a little bit right now because Bitcoin is down. NEO is up 14% as we open the equity markets. You've got Rocket Lab up 1.74%, 998, basically teetering on $10. I would imagine if you get a little bit more volume, you can crack through that $10 range and hopefully sustain it a little bit. Bitcoin falling right below 64,000. Berkshire Hathaway is up in the day, so some value stocks catching a little bit of a bid. Energy Transfer, that stock is up as well. Palantir 36.32, seeing a 1.41% decline. We haven't seen the 35s in a while for Palantir. Last time we saw 35, yeah, basically, I mean, we touched it a little bit on September 20th, but really around September 10th was when we saw 35s. And now, yeah, I actually remember because like September 12th, I think we hit 36. So, or September 13th, one of those days. So 36.44, we've seen Palantir kind of decline in the pre-markets whenever it opens, and then it does a reversal every time over the past couple of weeks. Maybe this time's different, but even getting a dip to 34.35 that you would expect is natural, we have not gotten that dip. And that's the crazy thing about Palantir. We have not gotten a substantial dip from 37. And it's been like 2 weeks, and insiders have sold a crap ton of stock. It's like there is so much liquidity for this company, and the market really can't get enough of it. Tesla right here, 261. All right, Tesla goes green. I love it. Tesla breaking above 260. Nice to see green reversal from 258 on Tesla, which is not bad at all. HIMS is at 18. All right, that's not bad. HIMS been through a rough year, but HIMS back at 18, went from 24 all the way to 15, now back at $18 right now. SV says, I just had a surgery and now I'm watching the market open with you guys. SV, thank you for being here. I hope the surgery went really well. I'm happy you're able to watch the market open with us, even from the hospital. So thank you for being here, SV. S&P 570 got a little bit of a green candle, but it's down from 571. CrowdStrike at 283. QQQ at 486. Tesla, we're down a little bit, but still holding that 260 level. Google 164. Look at Alibaba, up 3.5% on the day. Alibaba just continuing to get momentum. Costco's up. Wow, is there any news on Costco? Costco had a good earnings, but it was kind of flat on earnings. It's up 2% right now. Let me see if there's any news on Costco. Costco got upgraded by TD Cowen to $975. Okay, boom. So that upgrade is what's helping Costco right now. Yeah, look, Costco had a great earnings. E-commerce growth was 19.5% of sales. Same store sales was 6.9%. Their app was downloaded 30% more than last year. Like they grew in a lot of the digital categories, even if the actual top line revenues didn't grow that much. And so you're seeing Costco get some of that margin expansion as well. Now Costco as well trades at a 55 times price to earnings. You could argue it's a little bit expensive, but they have had a really good year. Google right here at 166, Dutch Bros at 32.47. What else do we have? What else do we have? Micron down a little bit right now, down 1.29%. All the airlines are down a little bit, even though they were up 10% last week on the oil prices starting to come down. Where are the prices of oil, by the way? Let's check. Oil prices. Oil is up a little bit today. 68.45. Still below 70, but it's up a little bit right now. Why is Apple up? That's a good question. Why is Apple up? Well, honestly, holy crap. 232. Who the hell woke up and decided to buy this much Apple? Wow, breaking the 230s is very, very interesting for Apple. I mean, it's only broken 230 like 5 times this year, and every time it got rejected and it just fell. Like at least in the next 24 hours, at least it would take a fall. Like in July, it was hovering at 237 for like a couple minutes, and then it fell. I think the reason's Apple up. There's no other fundamental news outside of China. It's obviously China. I mean, Apple has so much of their supply chains in China. If they can save any bit of costs on borrowing or just the general efficiencies they get in that Chinese market, I mean, Apple's going to get margin expansion as well. So, yeah, that's why it's up. Now, look, I don't know if that thesis makes a ton of sense for a company as big as Apple, but I would imagine it would make them yes, it's going to make them more efficient given all the China stimulus. It's going to make them that much more efficient. I don't know. The other reason I think Apple's up, I actually went to the Apple store over the weekend. It was pretty booked. I'm not going to lie. And I've been a bit skeptical about Apple demand, Palantir 36.42. But when I went there myself, I could barely get someone to talk to me for 20 minutes to help me buy an Apple Watch. So, not for myself, by the way, it's for someone else in India. So I don't know. I mean, there was a decent amount of demand at the local Apple store I went to. There were even people trying the Vision Pro, which, I mean, usually when I go to the Apple store, no one's in this section, but people are actually trying it on. So maybe the fact that the iPhone came out, more people are coming into the store. And because they're coming into the store, they're just excited to try other products. Robinhood right here, 23.43, down about 1.99% right now. Robinhood likely falling because Bitcoin is falling. Bitcoin just hovering above 64,000. S&P at 571, trying to get back to green, 0.04% down on the day. Hopefully we can see it gets a little green. And then the Qs went green. Why are the Qs green? So is that because of Apple? I think that's because of Apple. So Nvidia's down, Amazon's down, Google's up, Meta's up, Microsoft's up, Apple's up, Tesla's up. Dude, Apple's up 2%. That is a lot for Apple to break the 230s. Wow. So there you go. That's why the Qs are up, and Amazon's basically flat right now, which is not too bad. Mo said bro is smuggling the entire Apple store into India. Yeah, basically. I mean, dude, it's more expensive to buy an Apple Watch in India than it is in America. So that is why that's why we're taking some products over there. Why is Amazon down the last few days? That's a good question. I don't know. Amazon has done an incredible job growing a lot of the kind of core things investors cared about, and it got a ton of upgrades. I mean, I think even this morning they got upgraded to like 225 from 3 different firms. So I think now the street's just waiting for earnings. They want to officially see that Amazon is meeting the expectations, particularly on advertising and particularly on operating margins. And then I think they'll give them the bid to 200. Now, obviously, Bezos can't be sitting there waiting to cash out at 200. But I think Amazon earnings are going to be pretty good. I think this quarter, Q3 usually tends to be decent for them. Guidance going into Q4, the holiday season should be good. Tesla right here, 262. And so I think Amazon will be okay. Tesla with a nice reversal. 1010's coming up. We got about 20 days left till 1010, or not 20 days, 10 days left till 1010. It's going to be really exciting to see what they produce. And I think the market might reward them if Elon puts some serious timelines on these projects that he wants to put out. Meta at 570, Google at 165, Microsoft at 428. The Bitcoin stocks right now are probably retracing just a little bit. Yeah, all of them are down on the day because Bitcoin's down from 66 to 64. CleanSpark's down, Coinbase is down, MicroStrategy is down, Bitfarm's down, all the miners are down. Again, Bitcoin really needs a green candle to the upside to get the miners to start moving a little bit more. But the other Bitcoin proxies like MicroStrategy and Coinbase, those are down just based on the fact that Bitcoin is down right now as well. What else? Chris CRM says, I work across the street from an Apple store and the lines are across the street. The stores are super busy and it's so hard to get help in the moment without setting an appointment days later. Interesting. Yeah, there's some more anecdotal evidence that Apple is starting to have a little bit more demand than we thought. And maybe Dan Ives is right. Maybe it is a super cycle. And if that's the case, Apple probably, I mean, if we have a bull market kind of real run at the end of the year, $4 trillion, I don't think it's crazy. Maybe it doesn't happen at the end of the year, maybe beginning of 2025. But it just, I mean, they're only $500 billion away, which is, I know it sounds crazy saying only, but if they go up, another 10, 20% based on like a real upgrade cycle that just blows it out of the water, maybe you get there. But all likelihood, I think 250 is what Dan Ives' target is. That's probably more realistic. Even 230 is incredible to me. It's just a question of if they put off the numbers based on that demand. Palantir reversing as well. Look at that. We touched 36.15 right back to 36.50. Dude, people are not selling this stock. They're just not. It's just not happening. It cannot fall more than 1%. I mean, maybe it falls in October and we get some volatility, but so far it is maintaining its momentum in such an amazing way, holding this 36 level. I mean, even if we end the year at 36.50 and it just like consolidates and builds a really strong base at 36.50, then it won't be that scary buying it at 36.50, right? Because I know right now people are thinking the valuation is stretched, but if it stays there for the next 6 months or even the next 4 months, you start to develop a base and you feel pretty comfortable buying it at these levels. CCL now is down about 2.8%. We'll call Chris in a couple minutes and we'll get his perspective on this. Palantir at 36.50, HIMS 18, Robna 23.42. Coinbase down about 4%. Neo still up about 12%. Where's Baba? Baba, there you go, up 2.69% on the day as well. Oh, also speaking of Apple, Apple pulled out of the OpenAI deal. On Friday night, Apple said they're pulling out of the OpenAI deal. This to me, I mean, it's emblematic of the fact that I don't think Tim Cook trusts Sam Altman. It makes no sense to pull out of this deal if GPT is the default foundation model for Apple Intelligence. Like, why would you not invest in the model that you guys are putting as the default model above Google, Anthropic, etc.? I think Tim Cook saw the executives leave, and he's thinking, hey, if OpenAI implodes, then he doesn't want to be part of that disaster. If OpenAI really blows up in front of his face, he can just switch out GPT for Gemini and be like, we've terminated our partnership with OpenAI. We're moving on to a different LLM. If he actually owns equity in the company, then he has to actually deal with all the issues. And I think he's kind of giving himself an out by not investing. Now, Apple historically has never really invested big in companies. The last major acquisition they did was Beats by Dre for $3 billion in 2014. Otherwise, they don't make investments. People have said Apple should have bought Tesla. They didn't even take the meeting. People have said Apple should buy Disney and Netflix for the past couple of years. Apple doesn't buy companies. And so even them investing in OpenAI, I heard when I saw the rumor a couple weeks ago, I was like, that's weird. Apple doesn't do these types of things. And now Apple's officially pulled out. And it might be because of the issues they're seeing with Sam Altman inside of OpenAI. Also, Johnny Ives and Sam Altman might be working together. Johnny Ives was one of the former directors at Apple designing the iPhone to build a new AI device powered by GPT, which would compete with the iPhone, which means Apple would literally be funding a competitor by investing in them. So, there's probably a decent argument that Apple can make for just like pulling out of this deal and not being there. But I think the three executives leaving in a day that put them over the fence. Amazon 188, Tesla 263. Tesla's up 1% on the day, which is not bad. 9:45, we have Chicago PMI. Okay, cool. Let me pull that up right now. Thank you for reminding me. We have a lot of stuff this week, dude. So this week, by the way, Jay Powell speaking at 1 p.m. I'll be streaming at 1 p.m. I don't know what he's speaking about, but he's speaking at some conference about something. This week, we have Powell speaking today. We have September ISM manufacturing on tomorrow. We have JOLTS data tomorrow. We have non-farm employment data on Wednesday. We have the October OPEC meeting, which is very important for energy prices on Wednesday. We have initial jobless claims on Thursday, and we have the September jobs report on Friday. So there is a decent amount of stuff that we will be looking at this week in regards to some of the macro stuff. Apple has over 114 M&A acquisitions. Yeah, but remember, the acquisitions they've done have not been blockbuster deals. A lot of these acquisitions have happened over the past 20 years. And I think the last company they bought was like 125 million. And it was something to help like Shazam, which is one of the companies they own, some AI thing. Like they don't really do blockbuster acquisitions. And look, good for them, right? They don't need to spend money on externally, because the reason you do an acquisition is because you can't grow internally. So, but you buy something else to try to get more growth. Salesforce is like really a legend at doing that. But Apple has never needed to do that, but it's led people, but Apple's also not growing right now, right? Apple is growing at 0%, or I think like 1.2%. So a lot of people are thinking, hey, we love you, but if you're not growing, why don't you buy Netflix? Why don't you like do something to enable growth? And Apple is kind of doing their own way. So I guess we'll see this earnings if the iPhone can create that super cycle to help Apple as well, again, to internally grow. Palantir 36.48, continuing to hold the $36 level. IWM basically green on the day. It's flat. SoFi, nice reversal. SoFi was at 775. Now it's at 797. They have earnings in a couple of weeks. MicroStrategy at 170. That's down about 3.4%. Pinduoduo is up 2.4%. They've had a hell of a month. Look at them. They were at $90 on September 5th. Pinduoduo. They're at 138. I mean, that's pretty incredible, dude. That's pretty incredible. Amit, will option prices adjust right after SMCI splits tonight, considering to buy leaps after? Yes, I'm pretty sure the options will adjust by pre-markets at 4 p.m. SMCI up 2.35%. SMCI took that nasty dip from 485 to 373 on Thursday, after being investigated by the DOJ for something. We don't know exactly what they're being investigated for. And they're currently up 2.38%. In terms of buying leaps on SMCI, I think you just have to be for sure on the thesis. The only part of SMCI outside of the whole DOJ investigation stuff and the failure to file the 10K that I have concerns with, it's not their top line growth at all. It's not their guidance. It's not their demand. It's their gross margins. If that thing doesn't get better, I don't know how much more expansion the street can give the current multiples. But if it gets a little bit better with the growth, then I think the street can find a thesis to give to them. Okay, Chicago PMI just came out. We came in at 46.6. The market expected 46.2. That's a beat. That's good. Is the S&P up right now? That's good. S&P, yep, you got a green candle. Small green candle, but you got a green candle. That's good. That's not bad. So PMI comes in better than expected. Tesla's at 265. Yep, well, that's pumping Tesla. That's good. All right, there you go. So individual stocks are benefiting from that. Tesla right here up 1.6%, 264. Tesla, maybe 270s in the playbook. That was the 52-week high for Tesla this year. HIMS is up as well. S&P, basically, there's that green candle on the S&P. Qs, I imagine, are green because of this. Rocket Labs at 993. This is good. I mean, it shows that we're doing, more. We're still contracting because it's below 50, but we are expanding against the expectations on the PMI in regards to services and manufacturing, which is not a bad thing at all, in my opinion. And the market should be, benefiting from that expansion as well. Will interest rate cuts hurt Robinhood and that will stop Robinhood? Nope, probably not. I mean, look, they're going to lose about $40 million on every 25 bips of interest rate cuts that we get. So they've lost 80 million in top line revenue because we reduced by 50 bips. However, they make up for that in transaction revenues. And so if you understand the Robinhood thesis, the net interest income is not as important as the transaction revenues. It plays a role, but I think the transaction revenues matter a lot more. And that's why they got upgraded today by Deutsche Bank to $27. They likely talked to the CFO, and the CFO pretty much likely told them, hey, our transaction revenues are going to make up for a lot of the net interest income losses. And as a result, Robinhood can still benefit from that. Rocket Lab right here, 989. Neo still up 11.3%. C3 AI is up a little bit on the day. Bitcoin right there at 64,000. CrowdStrike down a little bit. Amazon now red at 187. Google 164. Meta 568. PayPal 78.29. PayPal's had a great week as well. Really a great couple months. IWM at 220. Small caps catching a bid after that PMI data. SoFi at $8. That's nice. That PMI data probably pushed it over the edge. Interesting. NVIDIA still down. AMD went green. Now, NVIDIA slightly down. NVIDIA was down 2.2% at 925. NVIDIA now, there's that green candle. Maybe PMI is the reason NVIDIA is like 18 cents away from going green, and that's led AMD to go green, which means the semis, yeah, you got Marvell going green, Lam going green, Qualcomm going green, SMCI going green. The rest of them are still slightly red right now on the day. All right, not bad. Not bad. Not a horrible market. Where's Rick? Where's our good friend Rick? Let's see how Rick's doing. Rick right here. Rick's up a little bit right here, 0.43. Robinhood 23.57. Palantir, look at that, 36.65. Palantir getting a green candle as well. Again, the momentum there is pretty intense. Are we worried about Middle East tension? So I've been doing some research on what's been going on in the Middle East. Overall, I don't think the markets care that much until we see some retaliation by Hezbollah, which we haven't fully seen yet. Then I don't think it's going to be as big of a concern for the coming weeks, but we'll see. I mean, and Bitcoin was the proxy for me. Usually Bitcoin really tanks on any Middle Eastern instability, and we had a ton of it this weekend, but Bitcoin was relatively flat. So I don't think global markets are that concerned about it right now. I think the macro landscape with China and the Saudis has been so positive that I don't think Middle Eastern tensions, because what's the ramification of Middle Eastern tensions? Usually it's oil prices going up, right? Well, the Saudis just confirmed that oil prices are likely not going to be going up because they're going to keep drilling. So even if a war breaks out, a regional war or something, that's obviously bad, but will it really have an impact on oil prices? To an extent, but maybe not to as great of an extent as people thought in April when the S&P fell like 3% after Middle Eastern headlines broke out. So that's why I think we're not seeing that many issues currently with what's going on in the Middle East. Okay, let me give a call to Kris. Let's get his take on what's going on in the macro and CCL. And let's see what he has to say as well.
Hey, dude. What's up?
Kris, what's up? You're live on the Market Open.
Dude, China's like absolutely killing it. I don't know what to say, man. I think it's a trend that's gonna keep happening. We'll see what happens.
So before we get into Carnival Cruise, your China thesis from last week, I'm assuming it's not changed. They lowered the existing mortgage rates. Any updated kind of thoughts on how hard they're going with this stimulus?
No clue, but this is like the first salvo of many, dude. Like they're like the Chinese are not playing this time around, man. And a lot of the stimulus this time is more consumer focused. So with consumer focused stimulus, it's definitely going to reverberate to the bottom parts of the economy, and it's definitely going to get a lot more people to spend. When you also consider like China has this thing with property where, you know, like the worth of a person is almost like tied to their property, or at least that was the status quo prior to the property market crashing. So like, let's say if you wanted to get married or you wanted a girl or something, like you had to have like property, right? So people prided themselves on the wealth that they generated based on the value of the property. So a lot of developers were able to take advantage of that and basically, you know, take a hold of that frenzy and basically sell people something that didn't even exist at the time. So they'd be like, oh, let me, you know, build out a building. This is what it's going to look like. If you want a spot, like you got to pay now. And so a lot of people did that. Now that the property bubble's kind of like bursted, a lot of that speculation is going to end up going somewhere. And my feeling is that the Chinese government is probably going to go towards more of the stock market and say, look, if you want to build long-term wealth, we're going to have to do it through things that are more, what is that thing called? Out of the property or illiquid markets.
Right.
By the way, Chinese have also been kind of like big buyers in gold as well. I don't know if you know this, but you know that like Chinese like Gen Zers, they buy gold beans.
They buy gold beans?
Type it in. Go ahead. Look it up. Just type it in. China youth gold beans. And so in China, you can go out and you can buy like gold, like one bean at a time. Like it's like bean shaped, like little pieces of gold. And so they're using that as like a store of wealth / speculation.
Interesting. Yeah, I see it. That is it costs about $83 a gram or something.
Right. So if you can't afford like, you know, like a solid brick, whatever to invest in, you know, you can just buy a bean. So people fucking buy beans, right? So my point is that people there are willing to take on risk, right? They're willing to take on risk on property. They're willing to take a risk on gold. With the stock market the way it is right now, I'm sure that there's going to be a ton of retail investors trying to get into it. And so even when you look at the Shanghai Composite, you know, there was like the number of openings for like new accounts was like through the roof.
Yeah.
So a lot of this money, so a lot of people are saying, oh, this is just a short-term blip. I don't think so. I think this is going to be a general trend, at least for the near term and maybe even medium term, in which case you're going to see a lot of money jump into the Chinese market. And then, of course, you've got the speculators from around the world. They're going to probably jump in as well. So, you know, look, people are looking for value because the Chinese market relative to the size of their economy is still pretty undervalued. So now that you've got the kind of go ahead from, you know, the People's Bank of China, that they're going to be extra supportive and stimulative, and even the government policies are geared towards consumption.
So one last question on this before CCL. Are you at all worried that this is going to all blow up in people's faces at one point?
I mean, look, bubbles are meant to be blown up and bubbles are meant to be popped. The question is, are you smart enough to get out before the bubble pops, right? I don't know. We'll see. Usually these bubbles, they take a long time to really get inflated.
That was my thinking. My thinking is, hey, even if this pops, it'll take a couple of years. Like China's not letting it pop overnight, you know?
Yeah, exactly. I mean, they would rather have money flowing into the economy, into their capital markets, and, you know, than to worry about something that's more of an existential thing. Like everyone at the end of the day is going to think short term. Right now, the Chinese government, they're thinking, hey, listen, we're heading into a deflationary debt spiral. Our economy is going to falter. So let's make all the necessary actions today. Sure, we could cause a bubble in the future, but you know what? Hopefully we'll be smart enough to kind of deal with that when that comes. So it's almost like everyone, that's what the U.S. did in 2008, 2009. We had to kick the can down the road a little bit. And then the COVID, you remember? Did anyone give a shit during COVID? Like, oh my God, look, the government's spending too much money. No, everyone got the stimulus checks. Everyone's happy. Let's go. You know, let's keep the ball rolling for now. The smart people realized in the late 2021, it's like, hey, I think this is a problem, you know, and they were able to kind of sit out 2022. So we have to be smart enough to realize that's the same thing. So I think it was George Soros who said, whenever he starts to see a bubble, he usually rushes in. So whenever you start to see formation of a bubble, rush in. Don't be one of those people that's like so early to call something a bubble and then not make money. I mean, I have to take my own medicine on that. Look, I called AI a bubble, and look, the bubble is still getting bigger. So what does that tell you?
Right.
You know, so yeah.
Okay, so Carnival Cruise, let's talk about them. Stock's down about 1%, but this is one of the best quarters I've seen ever from Carnival, and quite literally, they have hit an all-time high in revenue. What are your thoughts on this quarter, and kind of how do you think the market's reacting to it right now?
I mean, it's a mixed bag, right? Earnings are one of those things where it can go in either direction. Like you could do extremely well on earnings, but the level of optimism going into earnings could be a little bit too high, in which case, you know, people will sell it off a little bit. In the short term, these market gyrations are never something that I like. Like I learned over a long period of time, and it's a very like hard lesson to learn, but don't try to do anything with earnings and try to do like these earnings plays, because a lot of times what ends up happening is expectations can really like go awry. And even if a company reports really great earnings, really great quarter, it could not live up to the expectations. And it's hard to figure out what the general market's expectations are. So I think the longer term trend for me when I see this is, hey, look, these guys are trending in the right direction. The business is improving. Capital return is improving. Like, they're making a ton of money. They're going to be able to use that money to pay down debt, in which case it's going to create long-term shareholder value. So if you're a long-term holder, you see earnings like this, it makes you want to be like, okay, good. I'm glad I'm in it. And
do you like Carnival here down 2% on these earnings? I mean, is this a entry price that's interesting if you don't have a position?
So I'd rather focus on the sentiment rather than actual like bottom line number, like, oh, this is the number it should be. I mean, you've been in the market long enough to understand that the market has ways to basically go up and down that's not really related to price, right? Yeah. You think you're getting a fair price at 18 and then it drops to 14, or you think you're getting a fair price at 20 and that should drop, goes up to 30. You can never really set yourself up with a target. The one thing you can do is figure out the sentiment and be like, okay, look, the market's oversold on this, and I think it's a great company long term. I think it's a good time to buy. So right now, if you look at Carnival, it's it's like right in the middle. So I wouldn't say it's great, but I wouldn't say it's bad either. So usually you want to wait until you have you have a pullback, but then also you have this oversold condition where you're getting a deal. And you can ride it from there.
Got it. All right, last question for you. We got October coming up. September historically has been a bad month in the stock market so far. We'll see how it ends out today, but it's been a better month than most years. Do you expect a lot of October volatility before the election, or you think things are looking good for October?
I mean, there could be volatility. I mean, the Fed doesn't meet until November. A lot of data is coming out in the next month. I personally am not focused too much on the U.S. markets as of right now. I'm more focused on the Chinese markets because I think the value. I'm heavily invested in the Chinese market, so that's probably one of the reasons why my focus is there more. But more importantly, I think I'm trying to figure out where capital is going to be allocated for next year. Right? Do you want to be in the U.S. markets, which are trading at much higher PEs than the Chinese markets, which are trading at much lower PEs? And you also have a ton of stimulus coming from the Chinese also. So you have a combination of kind of like a great bullish setup for China. Whereas the U.S., even though the markets are doing well and they're healthy, they're a little bit frothy, on a valuation scale. So the question is, like, which markets do you want to be in and which areas do you see, like, real upward value? And right now, to me, China looks interesting. I also am a little bit, once again, I probably shouldn't say this, but I'm worried about 2025 being a catch-up year for the market, which we could see, like, a mid-year drawdown sometime, depending on how things play out. But who knows, man? I think a lot of what I plan on doing for the rest of this year, enjoying what I have. So I'm not trying to get into too many other positions. I think we're gonna get a Santa Claus rally / relief rally from the election finally being decided. I'm getting tired. I'm getting sick and fucking tired of both sides, but really more the Kamala Harris side, just like putting up propaganda on YouTube. Because like, dude, there's so much like political bullshit with calling like fake shit. And the thing is, like, I've never seen this level of fuckery on either side. But this time around, like, they're really going hard with the whole like Trump thing, where they're like, oh, he's like supporting Project 2025, and Trump only cares about billionaires, even though if you look at all his policies when he was in charge, they were actually geared towards a lot of middle class things. So it's such a weird thing where politicians can lie on.
Do you think the market cares about the election now, or no? They're going to be.
And you always have to care a little bit, because you never know who gets in power and then what kind of like stupidity they'll come up with. I mean, my bet right now is on Kamala Harris getting voted in. Why? Because abortion. Like, look, if it wasn't for abortion, Trump would have won. All right. But abortion, there's a ton of people out there. The minute that you have any real argument with them, they'll just say abortion, and that's it. Like, done. Like, they'll never vote for a Republican because of the abortion thing. So abortion is like the top of the mind for a majority of voters in the country, and more than likely it's going to end up like tilting it in favor of Kamala Harris.
Let me ask you this. Go ahead. Finish the last sentence, and then one more question.
No, my hope is that if Kamala Harris does become president, that either the House or the Senate end up getting retained by the Republicans, and basically they get a majority in the legislative part. Because this way, if you ever looked at historically, you can see that even if it's a Democratic president and Republican Congress, you typically have like outperformance in the economy and everything. It's probably because politicians, whenever they get in charge together, they all figure out ways to fuck up everything. But when they're divided, there's less of a chance that they mess things up. So the goal is hopefully a divided country, a divided Congress, so that this way these politicians can't screw shit up by like either doing too much stimulus or or doing too much taxes or all this other nonsense that these idiots come up with as ideas like that are so brilliant, but end up just causing the next wave of problems. So I'm sorry, I just have a really cynical view of the government. So go on. Sorry.
Yeah, the last thing I was going to say is this port strike thing that's coming up. Have you done any research on that? You think this is going to be bad, or what do you think?
I mean, I originally thought it was going to get resolved, but I haven't done much digging on it. Everyone in the country right now is leveraging their power to basically get more money. And it's some of these industries that rightfully deserve to get more compensation. I think a lot more of this is geared not towards compensation this time, but more around automation. And I think this is the trend that we all have to kind of keep our eye on a little bit, where a lot of industries are going to face existential crisis thanks to automation. Right. So these dock workers, one of the demands, I don't know if you read through the demands, was that they wouldn't have like automatic like unloading and loading of cranes and all this other stuff. So I was like very curious about that. And I realized that, wait a second, whenever these ports now, they get modernized and automated, it increases productivity a lot. But at the same time, it requires a lot less like manual process. And so a lot of these people, they don't want to lose their jobs, right? So what we're going to see over the next probably decade is a lot of automation coming to many industries. And hopefully, like, the people have some level of control over the scale of that economy to basically demand to keep their jobs. Because, I mean, no one wants to see, like, a bunch of people lose their jobs and all this other stuff to, like, robots and AI and all this other stuff. So we'll see.
Right. Yeah, I think they also want 70% increases in wages. So we're going to see what ends up happening. Yeah. All right, Kris, thank you very much. Appreciate your take. We will talk to you later.
Take care.
Bye. All right, so that port strike, I do think, is a little bit of a big deal. Let's get a quick little update on that and what that's going to mean. But that strike is starting in like 24 hours.
Gulf Coast ports are preparing for a shutdown as labour talks stall before a contract deadline later on today. The International Longshoremen's Association will post an updated statement on Facebook. President Biden saying he won't intervene in any strike, telling reporters that resolving the dispute is a matter for collective bargaining. Bloomberg's Danny Berger joins us from a shipping port in Newark, New Jersey. Danny, how close are we to this strike?
About 16 and a half hours, John. By all indications, with no talks scheduled, with the White House not intervening, the strike will go on something, unless something remarkable changes. So at 12:01 a.m. on Tuesday, as the head of the Longshoremen's Association put it, a sleeping giant will be awakened. This is some half of trade that comes into the U.S. that the ports will be affected, 36 in total, all along the East Coast and the Gulf. The two main sticking points, they want a significant wage and benefits increase, some 80% over the next 6 years. The current offer up, the Longshoremen's Association has called it stingy. The other big sticking point is automation. They want significant language written into the contract to prevent automation that we see in the ports of Asia, that we see in in Amsterdam. They do not want that for fear of jobs lost. Now, they have significant...
Basically exactly what Kris was talking about, right? They don't want automation taking their jobs. And look, this is going to be an ongoing existential problem we see over the next decade, that industries are going to start to get automated, and you're going to have workers that are not automated yet that see what's coming, and they're going to be like, you know what, you can't get rid of us right now, and they're going to go on strike. And if we don't have the technology to automate them immediately, which no one has yet, then someone's going to have to win in that negotiation, and it might end up being the workers because they have all the leverage here.
Significant leverage at this time, more than they have in some time, considering it is administration friendly to labor. And there's a supply demand issue. There are not enough people to do these jobs. So it is leverage, which ironically is part of the reason that these employers want to put automation in the first place.
And of course, the other point of that leverage is this administration definitely does not want to see a spike in inflation before November 5th. Danny, can you give us a sense of what the timeline is now for these talks?
Well, so the contract expires at midnight. So we, again, are just talking hours away from that kind of thing. But there are no scheduled negotiations. Everything we know about what's been offered, that's been happening behind closed doors, too. Has not been made public. From what we understand, the White House has been trying to act as a mediator. But again, this is happening behind closed doors. The timing does get tricky because even if these ports are just shut down for a few days, that has ramifications that last weeks. By some measures, just one day of shut ports will take a week to clear out. So days turns into weeks. If it is a week-long strike, it means months. And that's when you start running into the issue of the holidays. Sure, some of these retailers have been stocking up, but places like small businesses don't have the capacity to hold up inventory. So again, this needs to be resolved in just a few days in order to not have a bigger economic impact.
There is $3.8 billion of trade that is going to be gone every single day in volumes if the strike continues. Number two, the strike is affecting the southern border in Texas and the northeast border around New Jersey, New York, Pennsylvania, etc. And so there's a lot of goods that are coming through the southern part and the northeastern part of the United States. If those go away because the workers go on strike, I mean, look, I don't think it affects inflation like for the next CPI report, but at least the CPI report after that, we're going to see an uptick in inflation, which is not good because the whole point of cutting rates by 50 bips was because inflation is really starting to come down. So that's not a good thing. Not good for supply chains. Definitely not good for earnings. I mean, imagine Best Buy can't sell the amount of laptops they guided to sell for Q4 because of workers on strike that were not able to effectively get the laptops to Best Buy's locations on time. Like, it's not a good thing, bro. That's not a good thing. So it's an interesting perspective. I think you can make the argument that these workers are actually furthering their automation by doing things like this, because now companies are like, all right, we just don't want to deal with this shit. We're going to hire a bunch of robots in a couple of years, so we never have to. I mean, this is the benefit of humanoid robots. They never have to worry about strikes. You never have to worry about strikes if you have a robot. A robot's not going to go on strike. A robot might kill you one day because they become smarter than humans and, like, you know, Terminator and all that stuff, but they're not going on strike. So that is the benefit to this. The problem is we don't have humanoid robotics yet at scale. So you've got to do something with the workers to be able to pay them. And then the question becomes, how much are you going to give up in terms of profit margins to increase pay for workers? Now, this is something Chris Camillo was talking about on the channel last week. He said, who wants to do this type of work? And one of the questions I pushed back against him is saying, hey, it's a little bit of a privileged perspective. Don't you think there are people that actually want to do the type of work that people are doing in the ILA? Which is, you know, work that is physical labor, but it's work at the end of the day that they feel is purposeful and rewarding. And his argument was like, yeah, there are people that probably want to do that, but their kids shouldn't have to do that. You know, like if your job is like putting boxes from here to here for 10 hours a day, that's something that if you want a better life for your kids, you probably don't want your kids to be engaging in that type of stuff as well. Now, there probably are other people that find purpose and meaning in that, but the far majority of the world is likely going to a spot where that stuff simply can be automated because it's more efficient, and it's just not something the majority of human beings, even if some people find value in it, Rocket Lab, by the way, up 2%, want to do because it's backbreaking work. And so I think this thing gets resolved over the next decade with bots potentially automating some of the stuff, but in the next at least 5 years, that's not going to be resolved. And so we're going to have to see some negotiation happen pretty soon, or else workers are going to continue to be going on strike. And obviously that's not good for inflation. Rocket Lab above $10, up 2.76%. We got SoFi above $8, up about 0.88%. not bad. Tesla at 262. Tesla still holding the 200s. Robinhood holding 2350, which is not too bad. Carnival Cruise getting hit. Interesting. I mean, I don't know why it's getting hit as bad as it's getting hit right now, down 3%. Not a horrible decline, but it's weird. It was a really good earnings. And I would imagine, it's not a guidance thing. I would imagine the streets may be worried about some type of volatility that would affect demand for cruises, even though, they increased their full year guidance. And that's why it's taking a little bit of a hit. Also, again, today's just not the best day in the context of the macro. PayPal 78, IWM 221, small caps are up, Google 164. S&P is slightly red, basically flat, and the Qs are slightly red. Where's Apple? Are we still at 230 on Apple? Still at 230. It's down from 232, but it's still at 230 with Apple. Fast forward when robots have unions, dude. Imagine that, bro. No, but seriously, don't you guys like it that is a bull case for robots. It's like you're never going to have to worry about negotiating with the robot. It's just going to do what it's told. And like at some level, that is really exciting if you're either an investor in a robot company like Tesla, because you just imagine the amount of robots they can sell based on that. It's like what the sales pitch is very simple. Hey, this thing is never going to complain. You're never going to have an HR issue. They're never going to want to take like a lunch break. It's just the things that workers that like for a decent job need to be able to do, like use the bathroom without having to be micromanaged. That's not going to happen with robots. The question is going to become what happens to all the jobs that are replaced. And I think that is a question no one has fully figured out yet. But the idea that we're not going to move forward and, move backwards in terms of how we think of labor, especially when we have a labor shortage, I don't think that's happening. And that alone is a Tesla thesis, right? That alone is an argument, even at 800 billion, which, you could argue is crazy for Tesla. That alone is going to unlock trillions of dollars of market value, which is why I have no problem building out my Tesla position next year if I have a bit more capital and having to buy it at some of these elevated prices. Because to me, entry point on Tesla, like it's always tricky. When's your best entry point? Because it's always quote unquote overvalued. But if you really believe in the humanoid thesis, buying it sub $1 trillion, I feel like is not the worst deal in the world, especially if FSD scales, which I think hopefully it will begin to scale as well. When is Powell's speech? At 1 p.m. So I'll be live with another stream at 1 p.m. and we'll listen to Powell. I don't really know what he's going to say today, but he's probably just going to talk generally about the economy. He's at some economic club business conference. I think it's in New York. Could be wrong, but it's at some place where he's having a conversation. What else do we have? UBI will be needed potentially. I mean, I feel like government's gonna have to figure that out as well. Rocket Lab still holding $10, which is not bad, dude. Look at that, 10.04, up 2.61%. Let me check the resistance on Rocket Lab. So if we want to be greedy and we want to get to $11 on RKLB, that would require about 30,000 shares to get there. That fit well. You got 18,000 waiting at 1089. You got 12,000 waiting at 1060. You got 20,000 waiting at 1050. I mean, it's possible. There would just have to be a crap ton of volume, and people would have to buy it up. But 11 might be hard. But even holding above 10, I think, is pretty exciting for Rocket Lab. HIMS at 1770. Palantir still holding up at 3654. Coinbase 180. Norwegian Cruise Line, that's down. Oklo is down about 5%. CrowdStrike 280, that's down. Yeah, so you're seeing all U.S. equities take a little bit of a hit. China's still up right now. By the way, China's going to be closed for the next 7 days from October 1st to October 7th because of some holiday that they're having. The Hong Kong market will still be open, but the other Chinese indices will be closed for the next 6 days. Okay, let's get an update from CNBC, and then we'll keep going from there.
And it was actually unified governments that performed better on an annual basis than divided governments. However, the upshot of the note was this time is different. And because the two parties are just so dug in and so opposite, they would like to see gridlock in terms of what would be better for the markets. They go through a whole sort of Trump winners. It's what you would think, deregulation winners like financials, oil and gas, a red sweep. They put in defense stocks into that basket as well. Trump losers are the trade war industries that are hurt the most, like an auto sector and agriculture sector. Harris winners, according to Evercore, renewables, EVs, with her continuing the rollout of IRA and other clean energy policies, the Medicaid leveraged healthcare insurers, that would help. And then financials, coal and gas leveraged utilities would be losers under this scenario, which all gets exaggerated if one party sweeps. And I think that, according to some of these research notes, that's the biggest risk for the markets around the election. Not necessarily the winner or loser, but what happens in Congress, because so many of these policies.
That would be the first time since 2021. Joining us here at Post 9 with more on the road ahead is Trivariate Research CEO and CNBC contributor Adam Parker. AP, morning.
Great to see you guys. How we doing?
Good. Do you think this China rally is sustainable?
I think there's legs to it. I think if you're a generalist portfolio manager trying to beat the S&P 500 and you're working big asset manager, you probably bought something last week. You probably said, all right, let me get a casino, maybe I'll buy a Las Vegas or Wynn, maybe I'll buy Freeport. I got to, they showed me a little something, and we've seen in the past when they do it, they can do more, and I might as well add a few percent there. So I think there's probably a good risk reward to owning some of it, as you guys talked about just now. Some of it was pretty beaten down and hated. People were short, that kind of stuff. So, yeah, I think it's a way to get a little cyclical exposure.
You don't sound overly excited about it.
The challenge is when you analyze we looked at the last 11 times that China stimulated and what it meant for U.S. equities, and it averages kind of garbage, because sometimes they stimulated like in 2022 when we were raising rates and everything was getting killed. So it's hard to use the historical.
I don't think China stimulated the way they've stimulated over the past couple of days. I'll have to do some research on that, but I do think this time they are stimulating in a much more aggressive manner.
Perspective and say there's a definite playbook, you buy the cyclicals. I think you have to look at stocks in the U.S. that are correlated to today's shares, or acted well last week and you feel like there's a little bit of legs to it. And I think casinos or copper maybe make the most sense with what I know right now.
How about this notion that, well, we're entering a little better seasonality, but this overall notion that near-term chop, medium-term upside, do you agree?
Whenever the consensus always agrees on something, I've learned that doesn't happen that way. I think the worst thing is, I've learned this in the last 25 years. There's nothing worse than being a consensus bear and then you're wrong, right? You come into September, you think it's going to be choppy, and then the market has a good month, So, the best thing is you're a contrarian bull and you're right? So I think everyone thinks it's going to be choppy. Look, I don't see how October earnings are going to be great. I don't see how we're going to get a lot of guidance up. The Q4 numbers are for more than normal seasonal hockey stick in there. So there's a lot that these companies need to tell you. And you're seeing some, I would say, real companies, FedEx, like ones that have broader implications, tell you things are slowing. Stellantis, I just should say, it's not a real company. It's got real dollars in revenue. So there's enough out there to say, I know it's slowing. The question is, will people care? So what we wrote a couple weeks ago is 90% chance that numbers come lower, 10% they come up, 50-50 whether the stock market goes up or not, because I think people are going to see through to the possibility of a better 2025.
What about election risk, which I started talking about? This idea.
I heard you. I was surprised you're talking. Why today? Well, we got a lot of.
We have a VP debate tomorrow.
You think that's going to?
I think it's
a VP debate.
Yeah.
Wait, there's a VP debate tomorrow? That's Walt versus JD. Wow, I did not know that. All right, that'll be interesting.
Yeah, I can't think. No, I don't care.
I'm looking forward to it. I would like to know.
I don't care.
How these people.
I don't care.
But your clients don't care?
No.
Really?
I talk to, what I do all day, right? I talk to institutional investors who run giant portfolios. Nobody is going to say I'm really thinking about the VP debate in terms of how I position my portfolio. Not the VP debate,
but the overall election risk policies like tariffs,
totally,
higher taxes.
I think, look, it is really hard to position a portfolio right now for what's going to happen on November 5th, even if we know anything on November 5th.
We're not going to know anything.
I disagree with the summary of the note you just referenced, because when you go back to 1928 and you look at, DDR, DDD, RD, all the combinations for Senate, House, what's the sample size on the sweep? 2, 3?
There haven't been that many.
Right. So for me to say,
interestingly, they've
this is just like 1940. That's the one data point that I gotta
So you just wait. You just gotta wait.
Well, I think
until after the election, or whenever we actually know who the winner is, which probably won't be that day.
What reliable polling source do I be? We've all learned that the risk reward positioning that isn't great. So I think you have to say, all right, where can I dream that, you know, what are equities? Buy my little dream today, sell it to a sucker with a bigger dream later. It's like, do you see anything that you can, maybe it's healthcare services, maybe they could have a lot of upside. It depends, you know. I don't agree that a sweep on either way is good for the market. I think then you get the risk of tail things happening on policy. So I guess I'm the consensus that I think the gridlock would be better. You know,
Tepper said that last week.
Yeah, I'm not giving my own political view. I'm just saying I think the gridlock could be good because you just get less fringy things happening.
And the note said that too.
If you look at the sociologists who are experts on this stuff, 20% of America, around 10% on each side, have extreme views. So the question is, like, is there any real policy in the middle that can get done? Is it going to happen where
Man, I forgot there was going to be a debate, bro. That is crazy. So, yeah, I guess we'll see what happens in that debate. But in general, I agree with him, dude. Trying to position yourself for the election's hard, dude. It's very, very hard trying to figure out how to position yourself going into the election. Here's some macro stuff, a couple macro charts I want to show. So, first of all, Goldman Sachs came out today and they said used car auction prices, which led most of the CPI, I think it was like 40% of CPI last month, and a lot more over the past 12 months, has ticked down in September after rising in July and August. So if we get CPI, which I think is on October 10th, that shows used car prices going down, that's really bullish, along with oil prices going down. Now, if we get used car, or not just used car, but used and new car vehicle insurance going down, that is also going to be super bullish. So we could have a world where CPI is getting close to 2%. Currently, we're at 2.5% right now. Goldman Sachs thinks that if we can continue to maintain this level of decline in oil prices, then we're probably going to see 1.9% CPI by the beginning of 2025. And they feel the commodities benefit from oil prices going down is going to decrease about 15 bips from the core PCE inflation over the next year, which is obviously just very, very bullish for getting more rate cuts, which is good for the broader economy. Now, another chart right here says Goldman Sachs sees 150,000 a month of payrolls growth in the first half of 2025, so from January to June, and 160,000 per month in the second half. If this is true, if we add 150,000 every single month for the next 6 months, and then 160,000 for the next 6 months after that, I don't see where the recession comes from. The recession comes from us firing people, having a net decrease in jobs, not a net increase in jobs. And so if that reading is accurate, we're going to have a lot more jobs. Also, they see about 140,000 to 160,000 jobs for the next couple months in 2024, which again, it just begs the question, where do we get a recession from if people aren't losing their jobs, if we're hiring these many people? Now, you can maybe say, hey, these job numbers aren't the most accurate. That's a fair point. But we still are hiring a decent amount of people, which just leads to more people having money, more people to put money into the markets, and more people to spend money, which helps company earnings growth at the end of the day. NVIDIA down about 1.4%. So NVIDIA tried to make a recovery to 120, could not get there. It hit 121.27, then came all the way right back down to 119. BABA still is up 2.8%. Robinhood getting hit a little bit, 23.34, down about 2.34%. Palantir still holding 36.60. HIMS 1771. The cruise lines are not doing the best even after Carnival's earnings. CrowdStrike down at 281. Amazon 185. Fortinet 76. ET at 1607. Google 164. Apple still holding 230. It's down from 232, but it's still holding 230. And then the S&P still holding 570, which if we hold that for the rest of the day, we're up about 2% for the month. One piece of breaking news I'm looking at, it looks like SoftBank is potentially going to invest in OpenAI. SoftBank. The information is reporting SoftBank's Vision Fund has agreed to invest $500 million in OpenAI at a $150 billion valuation. You know, Masa-san always finds a way to get himself into these rounds. And so there you go. $500 million going to OpenAI from SoftBank. I mean, if Apple's, you know why they're investing, probably because Apple pulled out. Maybe Apple was going to invest $500 million, and because they pulled out, there's more room for OpenAI or for SoftBank. And so now SoftBank's getting in there. I'm curious when the funding round will close. I think it's going to close in like 2 weeks, and then we'll officially get to see who invested and kind of what the valuation looks like. But it seems pretty confirmed that it's going to be about $150 billion at this valuation, which is a decent amount to pay. Ian, thank you for being here, sir. Thank you for joining the Market Open. We will see you on the next one. Thank you for being here, Ian, on the show today. What else do we have? Chris says, I'm betting that big money will eventually reposition and fall on the side of going in. I'll be in before them. Yeah, I think if we have a really nice Q4 rally, I think big money is going to get in and they're going to chase the rally as well. I mean, they're going to have to at the end of the year. You can't be on the sidelines and money markets if, we really get momentum. Rocket Lab, look at that, $10.08, holding that $10 momentum. The question is just going to be, does it happen right after the election? Does it happen a couple weeks after? Do we know on November 5th who's the winner? I mean, that's going to be, I'm not going to lie, I'm a little scared about like how the election is going to turn out and, if the country is going to be able to handle whoever wins, no matter what side wins. I hope it's a very smooth and peaceful, whoever wins, it's like, all right, we accept it democratically and we move on, regardless of, if your candidate wins or loses. But I don't know. I have little faith that that's what it's going to be like. So that's going to be something I think investors are legitimate to be concerned about that. But as long as that, ends up going okay, then I think it's going to be back to the market. And at the end of the day, with rates coming down and companies putting up good numbers, I don't know how many people are going to be that afraid of investing at that point. XLE energy index is up a little bit right now. MicroStrategy down about 3.7%. Snowflake 115. Yeah, it's kind of flat. S&P and Qs are also flat on the day. Last day of September, even if they close at these levels, it would be a great month for both of the indices. So even if they close at these levels, I don't think that's the worst thing in the world as we end out September. What does Team do? I think Atlassian is a project management software that no one likes using, but people use it. So $41 billion company. Yeah, like I haven't done a lot of research into these guys. I don't think they're profitable. Yeah, they're not profitable. Are they overvalued? I don't know. I'll have to go a little deeper into them. Year to date, their stock Team. Let's look at this one. Team stock. Microsoft's ticker symbol should be Team, bro. Team stock is down 30%. All right. People really don't like using this shit. It peaked at 400. See, this is the thing, dude. This thing was $400 in 2021. Like, for people comparing this current markets like we're having to 2021, it's just not the same, bro. In 2021, interest rates were 0 and everything was NEO was $60. It's just not the same, bro. With interest rates this high, it's just not the same. Now, if interest rates continue to come down and companies have good earnings, I think we could get to elevated levels, but 2021 was different, bro. It was just different. 10:30, we got the Dallas Fed Manufacturing Index. Okay, we have 2 minutes till 10:30. Let's see. 10:30, we usually get a market slam. So we'll see if that happens again at 10:30. The Dallas Fed Manufacturing Index is a general business activity index for manufacturing in Texas. And it was negative 9.7 in August, which was better than negative 17.5 in the previous month of July. This month, the street is expecting negative 4.5. And if we come in ahead of those levels, I don't know if the market's really going to react this much to that index, but maybe we'll get a reaction right there based on the number. All right, so that should be coming out in 30 seconds. Here's the S&P. We'll see if we get any movement on the S&P based on this number. Again, pretty much flat. Pretty much flat today. Nothing too crazy. Bitcoin miners getting crushed today. CleanSpark, Bitfarms down 6%. Yeah, dude, again, the thing about the miners is they have to have a move on Bitcoin that is far greater than the stagnation that we're seeing on Bitcoin. Like for the miners, Bitcoin doesn't just have to go up. It has to not be flat. And presumably it has to be volatile to the upside, like really volatile to the upside. We talked about this a couple of weeks ago, dude, and I know I sounded like a bear on the miners. I'm not a bear on the miners because I'm bullish Bitcoin, so I think the miners will do well. It's just in the short term, your capital is being burned because if it costs them $40,000 to make a Bitcoin and now costs more because of the halving event, and Bitcoin's only at 63,000, they're not making that much money after you take away all their costs. So Bitcoin has to go realistically to 80, 85,000 for them to really make a profit and show those profits to their investors. And that Bitcoin's been flat for like 3 months. That's just not happening.
So as a Bitcoin proxy, I've just never been the most bullish on it. But if Bitcoin, goes to 100,000, then I don't think it matters too much. Now, if it goes to 100,000 a year from now, yeah, CleanSpark might go from $2 to $9, but it's not going from $9 to $50 the way people expect it to happen. All right, the index is out. We came in at -9, which is actually not that good. So the market wanted 4.5 negative. We came in at -9. That's better than -9.7. So it is decreasing, which is good, but it's not what the market expected at -4.5. Now, again, that's just in Dallas, so it's not that crazy, but yeah, S&P doesn't care. All right, so that index is not that serious for the S&P. I think Chicago one is taken a little bit more seriously, but S&P doesn't care too much. How long do you think Palantir will consolidate from 35 to 38? I think it could happen for the rest of the year, dude. I mean, unless earnings are so amazing, I don't know if we get crazy multiple expansion. Like, could I see a run to 40 off good macro, good earnings? Yes, 100% I could see that. Do I think it's more likely we consolidate from, let's extend the price range from 30 to 38? Yeah, I think that's possible. And I think that's healthy. I think it's very healthy, dude. After 125% move in 1 year, you want to consolidate at a certain level, if it's 35, 36, whatever, and then get ready to make the next leg up. But I think there's a lot of ways that it could go for Palantir. Could it fall back to 25? I think that's possible. I think it's just good hard. If Peter Thiel's selling 600 million, can't tank it to even 2%, then I think the 20s, at least for now, is going to be hard to see. Maybe next year if we have a recession or like a general macro wind down. But besides that, I think holding 30s is not bad. Your girlfriend just broke up with you during trading hours. Well, I would go short Bumble right now. Then I guess dude, this stock Bumble is at 650. This stock's been a disaster as well. I'm sorry to hear that, Deacon. Maybe you gotta dump whatever you were trading when she texted you. Maybe that's how you deal with that. If you are bullish on Bitcoin, buy Bitcoin and not the miner. There has to be something specific and amazing in the company that will make them 3x more than Bitcoin to be worth the risk. I 1,000% agree with this comment. 1,000% agree. I think some people are a little brainwashed on the miners. I'm not going to lie, and I don't mean that in an aggressive way. But I've spoken to some people who are deep in the miners, and like it's a little ridiculous sometimes, like the way they explain the thesis. And I'm like, so your thesis? They try to like talk about all this other shit. It's like, dude, no. Bitcoin needs to go up. That is your thesis. There is no other thesis. Don't tell me about anything else. Bitcoin needs to go up, and the company needs to produce real results for investors for this to take off. And Bitcoin realistically needs to get into that 80, 90K range for there to be a big profit on the miners. If that doesn't happen, we're not seeing that. I think Bitcoin will get there. So I think the miners will be okay. But you got some people trying to come up with all these fancy explanations for the miners. It's like, there's just one explanation. It's a Bitcoin going up. And that's it, Like, I'd rather like MicroStrategy over the miners, because MicroStrategy is just like leverage against Bitcoin. So if Bitcoin goes up, MicroStrategy goes up. But if Bitcoin goes up, it's not guaranteed that the miners go up, especially not if Bitcoin goes up like 2%. If Bitcoin goes up 2%, MicroStrategy goes up like 4% or 5% or 2.5, whatever it is. But the miners don't have to go up, because a 2% move on Bitcoin is not enough for them to be profitable on the Bitcoin that they're mining. That's the problem. The thing is, CleanSpark is actually a really good company. It does not matter. Absolutely does not matter. CleanSpark, like I've spoken to the CleanSpark chair of the board of directors, Matt Schultz. He's a great guy, awesome guy, nice guy. He's a funny guy. It doesn't matter. Bitcoin has to go up. No one can say the miners are good companies, because they're all predicated on one thing, which is Bitcoin going up, and going up in a certain amount of time dramatically. And so until we get there, I don't know how the mining thesis really plays out yet. But again, I am bullish on Bitcoin, so I'm bullish on miners. I just, I wouldn't allocate to the miners right now, given Bitcoin's flat. But who knows? Maybe Bitcoin goes to 80,000 next week, and the CleanSpark goes to $20. Like that is very realistic. That is also very possible. It's just a question on Bitcoin having that type of move. John says, if SoFi posts its fourth profitable quarter, does SoFi stock start to get bought up by the funds? John, Well, let me show you guys the SoFi move that I made. So let me show this. I made this on Friday. I've officially locked it in, and this is what I'm doing with SoFi. Okay, this is my plan for SoFi, and this is how I'm thinking about it over the coming year. So this is what I'm doing with SoFi. I am making a $3,500 bet in the derivatives market on SoFi. And I am betting that the risk to reward on this is really good. So I purchased $100, $15, $20 spreads on SoFi. There it is right there. So you can see 100. The long call is 15. The short call is 20. And they expire 2026, which means essentially to like dumb it down, I'm betting SoFi gets to $20 by 2026. Now, that's pretty aggressive, right? I agree. That's pretty aggressive. However, because SoFi is like below $8, I paid 35 cents for this spread. 20 minus 15 is $5. That's the width of the spread. 5 divided by 0.35. That is a 14x return, which means my 3,500 goes to 50,000 if SoFi hits $20 by 2026. Do I expect SoFi to hit $20 by 2026? Not really, which means even if SoFi goes to like $12 or $14, this thing can like theoretically 8 to 7x, or potentially if we get close to the expiration and we're at, we're in the money, $16, $17 because my long call is 15, this thing could maybe be up 11, 12x. There's a lot of different ways it can play out. However, my idea behind this is I'm not bullish on SoFi's technology at all. I've been very unapologetic. I'm not bullish on their app. You can't even sell options on it. I don't think their tech is that different from like a Bank of America app. Like I really don't think the company understands consumer-facing technology at all. However, 2 reasons I like SoFi. They've been in a downtrend for 3 years, and at some point that sucker's got to break. It's got to break. Number 2, rates are bullish for their lending business. That is undeniable. Whether the stock reacts to that or not, I don't know. But I do know that rates are bullish. They will probably increase guidance. They're already profitable. That is a good thing. Number 3, I lied. I have another reason why I did this move. I have been talking about SoFi for 3 years. Okay? I can't explain it as well as Tanner, but I can explain the company. Now, Tanner can explain it. He has like a PhD in SoFi. I have like barely a bachelor's degree, but I can still explain it. I am not going to let SoFi go to $20 or 15 or 16, and I have no way to capture any upside from that because I've been talking about this damn thing for 3 years. So this was more so one of those things where like, could that 3,500 be used in a better place right now? Of course. I would much rather put it into Palantir or Robinhood. But I'm like, you know what? I'm not missing this stupid run if it has a run. It's 18% short. Can we please get like a Rocket Lab move here? Maybe. And so that's my move on SoFi. So for the next year, I think SoFi $20 by 2026 is a little aggressive. I agree, but like if it's gonna break out, it's gotta break. It's schmuck insurance, exactly. I am not gonna be the schmuck that has been talking about SoFi, even if I've been semi-bearish on it. I say semi because I'm not bearish on the company or bearish Noto. I'm just like bearish on their consumer technology portion of the business. But I'm not gonna be the guy that was talking about it for years, and then SoFi's at 15, 16, and I have no upside. Like I'm not doing that. But I don't want to own shares because I don't really. Like, first of all, the shares alpha is not going to be that good because, what if SoFi only goes to like $13, $14? Like, that's not the best risk reward. And second of all, it's not something that I want to really make a long-term position for me. So there's no reason to get shares. So that's my strategy. $15, $20 spreads, 35 cents. I'm paying a very cheap price. Why? Because the market does not expect SoFi to go to $20 in a year. By the way, Rocket Lab at 10.10. And the other reason is that Noto has options expiring on I think 2026, like, or not options, but like he has these performance stock units that he has to get the stock over 25 by 2026 in order for him to trigger like $300 million, some like convoluted thing. He needs the stock to be above 20. And if he gets that sucker above 20, he's going to make a lot of money. And my 3,000 could turn into 50,000, which is not a bad trade, dude. For 3,000 to go to 50,000, like I like the risk. If I lose 3,000, I lose 3,000, whatever. Like I would not like losing 3,000, but it is what it is. But if I can exit, because SoFi gets above $10, $12 in the next couple months, then I can exit. I can maybe make a double on the money. And if it actually does get to like 18, 19 bucks, I'm going to be up 12, 13x on my money, which is not a horrible thing. So that's my play on SoFi, and we're going to let that sucker ride for the next coming months. Wow, look at Palantir. Palantir's green, 36.90. Palantir's officially green. Look at that. Look at that. The June 2026s, I looked at those, but the risk reward wasn't there. The only strikes available are 15 for June 2026. And again, the risk reward is not as good as the 1520s for January. It's not amazing. Like it's okay, but it's not amazing. But I think the $15 June 2026 call is much more safer than my strategy. My strategy, like the RR, is just way better, 3,500 to 50,000. But I think 15 by June 2026. I think so. If I should get there now, again, it's so interesting. Palantir right here at 36.91. I think there is a world in which we are talking about SoFi as like a $17, $18 stock, and all of us are like annoyed that we didn't buy more of it when it was stuck at this $6 to $8 range. I think that's a very possible thing that can happen. The problem is the only way for that to happen is for a real narrative to form around SoFi that is so explosive that it actually takes the stock that much higher. I have little faith that that narrative emerges, but I have more faith that their actual numbers based on the lending business via rate cuts increases so dramatically that the stock just has to go higher based on the increased growth and investors recognize the thesis. And then maybe there you get a short squeeze, and then maybe you get something close to that $15 range, potentially 16, 17, maybe 20 over the next 8 quarters that we have to look at earnings, or 6 quarters that are left. And that's my bet. And if it happens, great. If not, then we'll see what happens. But I think that could happen for SoFi. Rocket Lab right here, 1010. Palantir back to being green. Again, Palantir, it goes red for a little bit during the day, then just turns green right after, which is not too bad. Oh, Nodo's pay package is at June 2026. Okay. So I would imagine by January 2026, he's at least getting ready to get the stock to be at the levels that it needs to be at in June. Hopefully, if that's the case. If not, then whatever. But I guess we'll see. Jerome Powell speaking at 1 p.m. At 1 p.m., we'll see what Jerome Powell has to say. I'm banking on a short squeeze. I love it. No, literally, dude. I'm literally banking on a short squeeze because otherwise I don't know what's going to get this stock higher. And I'm also doing it to kind of just be like, I kind of don't know what I don't know. And maybe, who thought Rocket Lab would go from $4 to $10, right? Rocket Lab was stuck in a downtrend for, I think, 18 months, 24 months. SoFi's been stuck in a downtrend for 36 months. At some point, I feel like the narrative has to change and things have to start coming together. And I'm giving it a year to happen. And if it does happen, it's a very asymmetric bet. And if it doesn't happen, then I guess, we'll see what happens in 2026. But I would imagine things hopefully get a lot better, especially because it's not a bad company. It's just, the narrative around it is not necessarily the best. Berkshire is up a little bit. CrowdStrike's down 1.4. Amazon's down 1.4. Coinbase now down 5%. Bitcoin below 64. China is still up about 2% on the day. So we're playing Lotto now. It's not really a lotto. Look, at the end of the day, the reason I did it is because I know SoFi, the company. Like, again, I can't explain it like Tanner, but I can still explain it. I can give you a good bull case on SoFi. And again, I've been talking about it for a while. I feel like I know it enough to know that it shouldn't be at these levels, especially with rate cuts. And that's where the upside exists on this. The lotto part comes from if it goes to 20, then it's just like, the options explode, which is nice. But if it doesn't, even if it goes to 12 or 15, I don't hate that either. Okay, let's see some other stuff we got going on, and then we'll keep going.
You, Carl? David, thanks. Meantime, Tesla shares beating the rest of the Mag 7 for a change, on pace for their best month and quarter of the year. Can that rally continue as we get deliveries on Wednesday? We'll talk about that after a break.
Oh, wow. We have deliveries on Wednesday for Tesla? That's going to be a big deal. That's going to be a big deal. I would imagine those deliveries are going to be important. Last time they came in at what, 450,000 or something, which was not horrible. Let's get a quick update on chip stocks and why they're down as well. But Tesla deliveries, that'll be a big catalyst coming up on Wednesday.
Hey, good morning, Carl. Yeah, headlines tied to China seem to be weighing on shares of NVIDIA, down about 1.5% at this hour. Beijing is reportedly urging its domestic tech companies to stop using NVIDIA chips. This while ByteDance is said to be moving forward with a Huawei chip to build a new artificial intelligence model. It comes as the U.S. Commerce Department is expected to unveil new measures this October that would further limit China's access to U.S. semiconductors, including limits on sales of memory chips. Now, China remains an important market for the U.S. chip makers, and Chinese tech companies are incredibly reliant on NVIDIA, with reports of smuggling NVIDIA's chips in and accessing them through U.S. cloud service providers like Amazon and Microsoft. That's why analysts, including those at Bernstein, say further restrictions would certainly be a headwind for the sector. The SMH ETF coming off 3 weeks of consecutive gains. We've had a positive month, down though right now by about 1.5%. Sarah?
Okay, thank you, Seema. It's not helping the overall averages, especially the NASDAQ.
So it seems like the chip stocks are down because of China, which is annoying. I did not know ByteDance was using a Huawei chip. Quite frankly, I didn't even know Huawei makes the same types of chips that ByteDance could have bought from NVIDIA if it's kind of similar. So, yeah, I mean, look, we talked about this on Friday on the market close, but I would imagine imagine China would want Huawei to get the revenue from ByteDance. ByteDance is another Chinese company versus ByteDance paying NVIDIA for those chips when NVIDIA doesn't really benefit China. So if China's going full on CCP, stimulate our economy, it's obviously bullish for China, but it might be bearish for other companies like NVIDIA that don't get the benefit of that. You know, the weird thing about this, though, is NVIDIA doesn't have a lot of their revenue coming from China. I mean, I guess investors are getting antsy because NVIDIA really needs to beat estimates at a high level, and any bit of revenue that goes away is like bearish. But it's not like China is a huge business for NVIDIA. So weird that they're actually taking them down 1%. I think it's going down because it went up to 127 last week and investors got buyer fatigue again with NVIDIA. The RSI hit above 70. And so you're seeing a retracement. I think what's going on with NVIDIA, quite frankly, is what's going on with Palantir. NVIDIA is oscillating from 105 to 120. Palantir, it's a bit of a tighter range from about 35 to 38. But it's the same thing that, like, look, it's been a big year-to-date move in the stock. And now asking for more gains is just a little tough until you get a lot of better catalysts, which currently don't exist for either company until earnings. And so that's why maybe NVIDIA is just chilling out a little bit. What is Jerome Powell speaking about, and was this scheduled? Yes, Jerome Powell speaking out at 1 p.m. So we'll be done with the market open in a bit, and then I'll be back again at 1 p.m. What is he speaking about? I don't know. It's at a conference, and I'm assuming he's going to be talking just about, what they've been able to do over the past year with inflation. The specific name of the conference, let me see if I can pull it up. Oh, by the way, Bank of America sold another, not Bank of America, Warren Buffett sold another $11.7 million shares of Bank of America, which equivocates to $460 million. He sold another $800 million last week on September 20th or 24th, something like that. So Buffett is just constantly every day finding more shares to sell. They still have a crap ton of Bank of America because they bought a lot in 2008. But it's a lot, dude. They're selling a lot. And it does seem like he is raising cash for something. What is that going to be? I don't know. Another argument, again, the simple explanation is he thinks tax rates are going to go up if Harris wins. And so he's loading up before he has to pay higher taxes. So Federal Reserve Jay Powell at 1 p.m. will speak before the National Association for Business Economics annual meeting on finding harmony in the noise, transitioning to a new normal. That will be the name of his speech. Buffett's about to buy China. Dude, you guys remember Charlie Munger started buying Alibaba at $246 a share. It would be quite poetic if Buffett decides to get back into China, given this was Munger's, this was one of Munger's last big plays. And obviously it didn't work out until, before he ended up passing away. But it's starting to work now. Now, does Alibaba get back to 246? I don't know. It's at 110 right now. But if Buffett that's an interesting thing. Buffett knows everything before we know everything, right? What if Buffett was informed that China was going to start to stimulate hardcore and Buffett started raising a crap ton of cash? What if Buffett's been buying China for the past couple of weeks and we don't even know about it? And we'll find out in the next 30 days. And Buffett, the whole reason Buffett was exiting all these US stocks was to get ready
to dump money into China. I mean, it actually makes a lot of sense because everyone's thinking, oh, he has 300 billion. He's waiting for like some great opportunity. Well, if you don't think the market's going to crash like 40%, 30%, then what opportunity happens? If we get a 20% crash, yes, that'll be an opportunity to buy up equities. But we already had a 10% crash on August 5th and Buffett didn't like load up the boat. So maybe he's not waiting for a US crash. Maybe he's been waiting for a better opportunity and China is that opportunity. $300 billion put into China. If China stimulates hardcore, I mean, you know, even if he gets 20, 30% on that 300 billion over the next couple of years, which you could argue he would get a lot more of, especially if he's already in the play, that's just a better opportunity than investing in the S&P right now, right? I mean, it's logical. I don't think it's a reach to assume he could be doing that. Is he doing that? We don't know, but I do think it is possible. Buffett doesn't understand China. He said before that Munger was behind their China moves. But Buffett does understand valuations, right? And he probably saw China was undervalued relative to American companies. They just needed the green light. And Xi Jinping is giving a lot of green lights. Now, granted, putting all that money into China, I don't know if he has the risk appetite for that. But he's raising a lot of money. And you got to ask yourself, what is he raising it for? Is it really as simple as he wants to pay off his taxes before Harris gets elected? Or is it he's waiting for a real opportunity? S&P almost going green on the day, basically flat right now, 571.36. Robin at 23.37, SoFi 797, Palantir 36.75, Nvidia 120. Everything's pretty much flat. China's up today. Bitcoin's down a little bit. Everything else is basically flat outside of Apple. Apple getting some love. Even the Qs are flat today as well. Buffett is in line at McDonald's. You know, it's funny. Buffett has loved McDonald's, but he's never. Well, I don't know if he's never owned McDonald's, but he doesn't own McDonald's right now. Wow, McDonald's is above 300. McDonald's is $304 a share. Huh. McDonald's getting picked up. Year to date, McDonald's is up 3%. Over the past month, it's up 7%. Past 6 months, it's up 8%. Past 5 days, it's up 2%. McDonald's was stuck at that like 250 level back in July. So it's made a nice move from the it's up 18% over the past year. Does Amit sometimes sound like Obama? That's funny. You know, whether you like Obama or not, you got to admit he was one of the best public speakers of all time. I mean, I feel like everyone can objectively admit he was just an incredible public speaker. I mean, this guy knew how to speak. You know who sounds like Obama though? Josh Shapiro, the Pennsylvania governor. He sounds exactly like Obama. He sounds like he's literally trying to copy him. I think he's going to run for president too. I don't know when, but I imagine he would. Okay, let's get through some other headlines because we have a bunch of other stuff that I was looking at. We got some price target upgrades, some other headlines, and then we'll end it out for today. And then I'll be back in like an hour. So you guys can go get some lunch, and then we'll listen to Jay Powell. Maybe it's a 10-minute speech. Maybe it's a 30-minute speech. Maybe there's Q&A. I have no idea what this is going to be. But we'll look at it. But hold on. Maybe we can actually get some information on that. It's the National Association for Business Economics annual meeting. Let me see if last year they have a video of this, because then we'll know what it looks like. So National Association of Business Economics, Jerome Powell. Let's see what pops up. Oh yeah, this is what it looks like. Oh, it's like an hour-long meeting. Yeah, look at this. Look at this. Oh, we're going to get an hour of Jay Powell? Wow. Only us would be excited about getting an hour of Jay Powell. Literally no one else in the world cares about that, but we all care about that. So this is what it's going to look like. It's going to look like this. This was the 2019 version of it. Yeah, so he's speaking for a bit, and then he's sitting and he's taking questions from a moderator. That's what it's going to look like. All right, so we get an hour of Jay Powell today. I mean, dude, an hour of Jay Powell is it's exciting. It's, you know, it's definitely crazy to think we love getting, like, we all, you know, people like to shit on him, but everyone listens to him no matter what. And an hour of Jay Powell makes people happy. at the end of the day. Like hitting an hour of the knitting channel. Oh my gosh. Okay. All right. So some headlines. So Stellantis cut their outlook on slowing demand. Stellantis slashes 2024 profit margin forecast to 5.5 to 7%, previous from a double-digit target. Shares dropped over 8%, hitting their lowest since December 2022. Stellantis aims to reduce dealer inventory to 330,000 units by year-end. So another auto manufacturer that is struggling a little bit. Amazon. They got a price target increase by Bank of America to 210. Amazon has committed billions into producing and licensing content for Prime Video. We think Prime advertising will be a tailwind for the business. We remain constructive on the high growth advertising opportunity. So Bank of America on Amazon, 210. Truist on Amazon says 265. We believe North America revenue is tracking virtually in line with consensus estimates, reflecting a resilient consumer, sustained growth in ad revenue, faster growth at AWS, and a higher operating margin year over year, which would put Amazon hopefully at 10% or 11% on those operating margins. Amazon remains our favorite mega cap currently. That's for Truist, 265 price target. Robinhood, we talked about them, $27. They got a price target upgrade from Deutsche Bank. AT&T, this one was interesting as well. AT&T has sold 70% of its stake in DirecTV to TPG for $7.6 billion. This is weird. Okay, let me know in the chat. Who still has satellite TV in their homes? Meaning like you have a dish on your house and like that's getting the signal for you to watch TV. Because I was surprised they were able to sell that stake for $7 billion because that's like a thing. And like, yeah, YouTube TV, like there's so many other ways that people access content now, but apparently satellite dishes are still relevant. Some of you guys have it. Yeah, it's not in that many. That like when I drive around my neighborhood, I don't see a satellite dish on top of people's doors. You know, back in 2009, there was like everyone had it. Shopify has been raised to 103 from 90 from Citigroup. We reiterate our buy rating on Shopify and maintain its position on the U.S. focus list. Recent conversations with IR gave us incremental confidence in payments adoption, which also means that they believe the consumer is going to be healthy going into Q3 and Q4, which is a good thing for the broader global economy. That's pretty much it. Those are mainly the headlines. The other headlines are China stuff, but we already talked about the China stuff. So those are pretty much the main headlines that I was looking at. It's the spectrum that's valuable. Well, that's fair. That is a fair point. But like a lot of people apparently still have, dude, $7 billion for a dish and satellites. I have dude, it's been a decade since I've used a satellite dish, but apparently there's parts of the world that still use it. Amid no homo, but your facial hair grows fast. You were all lined up on Friday. Today you look like Grizzly Adams. You know, it's it's why I spend $100 a month on haircuts. If I didn't have to do the show, I wouldn't be spending that much on haircuts. I would get my haircut like once a month. Now I do it like every 2 weeks because I have to do a show. But the problem is, even after I get my haircut, when I get into the show, like it's like 3 days of a lined up, beard, and then it like all goes to shit. It's just, it is what it is, bro. It's like, it's how my hair grows. But yeah, the satellite dish stuff, that's incredible, dude. The fact that they were able to get $7 billion is pretty incredible. Doug says, why not get Starlink and YouTube TV, much less money? Yeah, I think that's a big opportunity for Elon, big opportunity for Google. I mean, there's going to be a lot of people that access OTT without needing a satellite dish to be able to get access to it. $100 a month, yeah, bro. Well, technically it's what, 70 because it's 35, so call it 70, not $100 a month. But yeah, dude, it's like, it's a business expense at this point. Like it's literally a business expense. $70 a month. What's that times 12? What is that? That's $840 a year. That's not crazy, bro. $840 a year is not crazy. For my hair to just like look okay. $800, call it $1,000 a year. That's not crazy. I don't think that's horrible. That's not horrible. Better come with a rub down. No, my barber is legit. My barber does, he does a good job. My barber does a good job, but it is expensive. It used to be $20 a year ago, and then I started paying a $5 tip, and then they brought it to 30, and I was paying a $5 tip. Then they made it 35. Now I don't pay a tip. Now it's 35. Now I'm like, bro, the tip's built in, and I don't care. You guys can judge me for that. I don't care. At $35, the tip is built in. I'm gonna have to act European here. Because I'm not giving a $5 tip on 35. Like that's ridiculous, bro. So it's built in, and it is what it is. It is what it is. No, the tip is built in, bro. No one's going to shame me for that. At $35, the tip is absolutely built in. And they know that. This is why I don't think they ever complain about it. They know that. The tip at $35, bro, fuck that. The tip's built in. Like, if it was $20, I could get it. Even if it was 25, I could get it. At 35, we're not going to 40, bro. Like, come on, bro. We're not going to. I'm still a U.S. consumer, okay? I'm still struggling as well. I'm not out here just able to like give these crazy tips like I have money to blow. Like, $35 is up there already for a haircut. Especially it's like a 20-minute process. It's not like it's, I'm not getting a face massage or anything. So I feel like that's reasonable. Now in India, when I get my haircut, it's probably going to be like $5, and I'll give like a $30 tip there because I just want to I just want to give out some money in India to a lot of those people that don't have the level of resources as we have in the United States. But in India, it's going to be really cheap. Now, granted, in India, I don't know if they give the best haircuts, to be honest. I mean, like, I have a Hispanic barber, and to be honest, Hispanic people have always been able to give me good haircuts for the past 10 years. Like, I really don't trust anyone else besides Hispanic people. Like, they just understand how to cut hair and they know how to do it. So in India, I'm not expecting the best haircuts, but we'll see. We'll see what we get. A headline from Fortune magazine: Palantir is totally misunderstood on Wall Street and shares will soar, Bank of America has told Fortune. Interesting. I mean, we kind of know Mariana has already said Palantir is misunderstood in her note that she put out a couple of weeks ago, but interesting that Fortune quoted them and they put that out. Well, we kind of know that. I mean, Bank of America has been bullish on Palantir for a long time. Someone asked, how do you do a spread like I did on SoFi? It's actually very simple. You just buy on Robinhood. It's really simple. Like, I mean, like it's you buy and sell at the same time. In fact, rolling options on Robinhood also is like so simple. That's how I was able to roll the Robinhood options. But like on the other exchanges, I don't know necessarily what it looks like. But if you just go to your option chain on Robinhood, you go to Jan 2026, you're gonna buy the 15 right there, plus. Then you go to sell call. You sell the 20 right there. And then it opens up a 2 option order automatically. And then it turns into call debit spread once you press it. Then you press review, and then you can check out right there. So on Robinhood, it's really easy. Like, it's not complicated. On some of the other platforms, I'm assuming it's not that. I don't know if Schwab or Fidelity sets up like a call debit spread, because now I would pay 35 cents, for example. And that would be, once I swipe up, that is the cost based on the long call and the premium I get from the short call. So I pay a net debit. The total profit I could get, it also shows you the total profit right there. The max profit you can see is 465. The cost is 35. So your max loss is 35. So 35 to 465 is a nice return if SoFi gets to 20. And then you swipe up and then boom, it's done. On the other brokerages, I you can still do this. It's just, it might be separate. It might not be the same, but that's how you do it. And it's not too hard. Learn to cut your own hair, Amit, on YouTube, an extra 30 shares of Palantir for free. Basically, there's some things that you don't stress the money about. And my hair is one of them. So when it comes to my hair, dude, I realized I'd rather just pay somebody else. I really would just rather pay somebody else. That's it. You have to be approved for level 3 options. Yes, you also have to. Now, it's not hard to get approved. Sometimes they might say, hey, we want to call you up to like ask you like some questions. They didn't do that for me. It's based on your account history. If you've been with them for a while, they'll probably approve you on Robinhood. If you're like a new person or you don't have that much money in your account, they're probably going to give you a call and just ask you to like explain what a call debit spread is. But if you know how to explain it, and by the way, you can literally just read off ChatGPT when they're asking you, so it's not the hardest quiz. Then you'll get approved. But yeah, you do have to be level 3 options to be able to do that. Okay. I think that's it. How was your date last Friday? First of all, it was not a date. Goodness gracious. Although what's really funny, you guys are going to get a kick out of this, is I met up with one of my boys who works at Palantir. His name is Mateo, one of the smartest guys that I know. He took a picture of me when we were getting Korean barbecue. And his caption was, on a date, kind of nervous. I told you guys he's kind of gay. And so I knew he would say something like this. But look at the background, bro. Look at what's in the background. I could not believe I didn't know about this for an hour until after he posted it. The freaking BRICS found me. They found me. They somehow found me. So I think in India, there's going to be a stream or a picture where there's going to be BRICS in the background, and I'm not even going to know where they're going to come from. But the BRICS find a way to find me. So it is what it is. The BRICS always find their way. Now, one thing I did talk to him about was this idea of Palantir being commoditized via AI agents. And he kind of told me, like, look, there's a risk, like anything could happen. I met another one of his friends that works at Palantir and we all had dinner. But their bigger point was that Palantir is building such custom software for these clients that the idea that BP would just replace Palantir with like some off-brand white label agent that could like do what the ontology is doing, it's just very unlikely. I mean, like it is a theoretical thing that should be discussed in terms of the risks to investing in Palantir, definitely down the line. But the idea that companies want to like not partner with a trusted software solution partner that could really like build something for them. Remember, a lot of Palantir is consulting. It's not a consulting company, but it's a lot of consulting with their clients to implement their software products. It's just hard for me to see that as a major risk for Palantir in the short term. At least right now. You went all the way to NYC and had fast food. Dude, Korean barbecue is not fast food. Korean barbecue is like it's expensive and it's not like McDonald's. It was good, bro. It was good. We also had this drink thing called Soon Hari. It's like soju or something. Have you guys had that soju with beer? I drank that. It's something you eat with Korean barbecue. I haven't had Korean barbecue in years, dude. Last time I had Korean barbecue, I was in LA in Koreatown. And that was years ago. So I actually was really excited for it. And it was really good. But yeah, it was a dope spot in New York. Overall, again, his thesis on Palantir is that they are really taking the market with how they're building custom solutions, and for that to be replaced is just hard to imagine. So that's the more difficult part of that overall thesis. I know the All In podcast talked about them. I'll probably do a video on what they talked about in a couple days as well. But even Chamath in that video said, hey, it looks like Palantir is going to have a much better go-to-market, and they're going to be able to basically outsell their competitors by charging a lower rate because they're going to have these custom solutions that are going to be uniquely architected by the ontology, and that other customers, other companies, AI, SaaS, or names, they're not going to be able to replicate that. So Palantir is going to be able to probably benefit at a broader level in regards to AI agents taking over. Dikembe Mutombo died today? What? That happened? Really? That happened today? Wow, that happened today. Wow, rest in peace. I did not know that. Huh. Your comment is the first time I'm finding that out. Huh. I did not know that. It was all you can eat Korean barbecue. Dikembe Mutombo, how did he pass away? He was 58 years old. That's young, dude. Brain cancer. Oh my. I did not know that. Dikembe, NBA Commissioner Adam Stern said he was simply larger than life. On the court, he was one of the greatest shot blockers and defensive players in the history of the NBA. On the floor, he poured his heart into helping others. Huh. Did not know that. Yeah, rest in peace to Dikembe Mutombo. Look, I was not watching the NBA when he was playing, but I obviously know about him because I'm a big fan of the NBA. Damn, that is that's tough, man. It is. It just reminds you. It reminds you of the fragility of life all the time. Yeah, the finger shake. Yep. Anytime anyone who's like, I mean, like with Kobe Bryant, obviously, anyone who's relatively well known, when they pass away, it reminds everyone, I think, of their overall mortality that is inescapable, and that it can happen to anyone. It can quite literally happen to anyone. The paragraph we have right here as well from the commissioner: there was nobody more qualified than Dikembe to serve as the NBA's first global ambassador. He was a humanitarian at his core. He loved what the game of basketball could do to make a positive impact on communities, especially in his native Democratic Republic of Congo and across the continent of Africa. I had the privilege of traveling the world with Dikembe and seeing firsthand how his generosity and compassion uplifted people. He was always accessible at NBA events over the years with his infectious smile, deep booming voice, and signature finger wag that endeared him to basketball fans of every generation. Life, man, it's going to happen to all of us. It's going to happen to all of us. It's one of those things where you just remember at the end of the day that that things happen and that life is very, very precious. And that's why, when we started the market open, I said, hey, we got to be grateful we're alive. At the end of the day, we are alive. And one day we all won't be. And taking advantage of life and just going for it and doing what you can do and trying to be the best person you can be. And in my philosophy, giving more than you take. It's the most important thing you can do. And I would imagine Dikembe is someone who absolutely gave more than a lot more than he took. All right. That is it for me. I'll be back at 1 p.m. So in 2 hours, get some lunch. We got an hour of JPOW, folks. An hour of JPOW. I mean, it's quite incredible that all of us are, because I know all of you guys are giddy for an hour of JPOW. I'm giddy for an hour of JPOW. We got an hour of JPOW. So we'll take a look at what JPOW has to say, see if he says anything that moves the markets. We got to end out the markets this in about 4 hours. We'll see how September ends for the entire month. And then we'll make our way into October and see how things go from there. All right. That's it. Thank you, everybody. We'll be back at probably 12:55 because 1 p.m. it starts. So I'll be back at 12:55 and we'll keep going from there. All right. Bye, everyone. See you guys in a bit.